Everything in this video is for general information and educational purposes only. Nothing presented constitutes financial product advice, personal advice, or a recommendation to acquire or deal in any financial products. Any examples are illustrative only and should not be relied upon as indicators of future performance, as past performance is not a reliable indicator of future performance.
Alrighty, guys, we'll get into it. So for a bit of an agenda tonight, I'm going to be going through a little bit about just the price action at the moment and sort of what I'm seeing just on Bitcoin there. Obviously, probably a lot of you have been staring at the chart and questioning, is this it? Are we gonna drop lower? Are we going to go higher? And I can sort of show you around in that as to what I'm looking at. And that's going to be a bit of a segue into the PD range recap. So when I say PD range, a lot of you know what I'm talking about when I talk about the premium discount range? I've done a few little Instagram videos and mentioned it quite a few times. Zaki's onto it.
Yeah.
We're all looking, get a few nods. Perfect. So we're going to just go over just a bit of a recap, probably for a lot of you, and I hope for a lot of you, you're just like, yeah, okay, I've heard you say this a million times, but we'll go over it. But then we're going to talk about a question that came up, I think, maybe it was you, Liam, was saying a couple of sessions ago, like, how do you actually identify a range? What we're going to do is we're going to go through a few different ways to identify a range. So rather than just the old traditional, this looks like here and here from these pivots, I can bring up and sort of show how everything can essentially become a range. And that's sort of a bit of a smart money concept thing. So I've been going over exo charts for the past few lessons, but I want to take a step back. At the end of this, we can look at a bit of exo charts. But for those who aren't up to it, you're probably jumping in here and thinking, rolling your eyes if I go straight into it, because, it's pretty heavy. It's pretty nuanced. Not everyone's going to be using it. So I want to sort of take a little bit of a step back from that and just talk about a bit of naked price action, a bit more trading view stuff that's a little bit more easy to digest. And then we can sort of look at a bit of exo charts, like I said, where we can, it'll be another bit of a segue again of how we can start to qualify things like FVGs and order blocks and that sort of thing. So I'll share the screen and let's get into it. Any questions or anyone want to ask anything before we get into this? All pretty good. Silence is a good thing. Okay.
I'm good, mate. I'm good.
Perfect. All right. So I'm going to start with the LTVW. Is everyone across the board with the LTVW system?
Yeah.
Feel free to speak up if you're not.
Yep.
Okay, so a lot of you would know that this is the 4-window situation. So we've got the yearly, the quarterly, the monthly, the weekly. So it's just giving us a bit of an overview. Time frames of the daily, the 12, the 4-hour, the 12-hour, the 4-hour, and the 30-minute. So we've sort of got some higher time frames that lead down into the lower time frames. And that way we're obviously keeping a bit of an eye on, are we in an imbalanced up state? Are we rotational anywhere? That sort of thing. So a few people and a few of the students and stuff have already noted this morning that last night we did get what we call an inside break. So what does this look like? I'll open this up and just going to move you guys out of the way on my Zoom. So what this looks like is we have this band that's coming up through here. That's the developing value area high. Obviously, your VWAP is your center point. You got one standard deviation above. So within one plus and one negative standard deviation is what the main balance area is. At the moment, the absolute mean of that is around $101,123. But we have this inside break, or law 2, but let's not talk about laws. Let's just keep it really simple. When we're coming back with inside of value, we have this time and space, which means, can we see, let me just get my drawing tool working for a sec. Sometimes I have to do a bit of, yep. So we have this bit of time and space. So what that is we have this little hollow gap that we can see through here. So if essentially an inside break wouldn't qualify if it just does this and goes straight down. Now, would it qualify on a different time frame? Yes, maybe on a lower time frame. But when we start to see things like on the daily time frame, as we just did, then we need to start paying a little bit of attention now, because we've got daily time frame traders seeing this rejection at the top, and that's basically saying, hey, I'm willing to accept between the developing yearly value area high and the developing yearly value area low, okay? Midpoint obviously being this area through here, which would be generally, if it was being traded, would be an auto take profit point where it can get messy. That is because we have the equal amount of supply in this area and equal amount of demand. This is where they come face to face, and that is where we see which side wins. And that's where we either move up or we move down from that point there. So pretty simple auction market theory concepts in there. And the time and space, what that is obviously we have time that moves this way. We can look at this axis down through here. So we've got the time and then we've got the space, meaning we've moved down, we've moved up, we've had ample amount of time, And now we can move down further, okay? So because of that, if we just go simply based off this at the moment, that if we were playing this alone, it would make sense that the next point that the price should now go will be the 101,000, call it 100,000, 100 to 101,000. So it should go down to that area from there. Will it go down there? Potentially. But does it have to go down there? Not necessarily. So why do I say that? Well, we can see that just because that rule exists, you could have said there was time and space in here. Obviously, we got the close, so that's not too bad. We had the time and space through here, so we had the close through here. Not so bad. This time doesn't look as good, though, because we have this wick to the downside. So straight away, you'd be taking this one here a lot more serious than you take these two. But you can see over time, there's times where we have dipped in, we haven't gone back to the VWAP, and therefore doesn't just necessarily mean this automatically rolls over and goes lower, okay? But nonetheless, that is something that I'm looking at the moment. Now, if I turn some naked price action on at the moment, I've got a little bit of a range through here. Now, whether you've drawn it from here, whether you've range expanded it up to the high, it doesn't make a huge amount of difference with these lines and levels. But we just have this as a range, a PD range at the moment, which we'll discuss in a moment. There is something that's going on through here, or let's discuss it now, okay? So essentially, what that is the fact that we actually have this PD range is broken into basically our 50% point, which is here. We have our range high, we have our range low, and then we've just broken it up into 4 boxes. So this is 50% of the range, and we can compare this to, say, a VWAP, especially if it's a previous VWAP, not exactly a developing, where it's moving in a diagonal manner. But this 50% level through here is basically going to be treated the same as we just discussed with a yearly, where we're going to have the highest point of supply up in here that we call the deep premium up through here. Then we're going to have next underneath is just our premium area. Then we're going to have our discount in here, and then we're going to have our deep discount down through here. So I said just before we actually started recording, I was basically saying I want to sort of explain why some of this price action's probably been a little bit choppy and a little bit hard to trade at the moment. And the reason for that is if we were to look at this as simply just price action, okay, it's actually the place that you buy. And that is why it's still stale here and it's still just sitting here and it's trying to buy back up. So price action traders who are not adding a volume component to it, and they're based off these same rules, whether it's an algorithm or a human being, they're going to buy here. And the only time that they're going to give in buying is once we finally lose this line down here, and then we can start to mark down. So this is why we still have a lot of people trying to push the market up. These aren't your loud vocal sentiment people calling for ridiculously low targets. These are smart traders who probably stay very quiet, who have large accounts, and they understand that an invalidation below this low is completely fine because they're buying exactly in a rule of where you should buy, which is within inside a range. While we're in the range, we need to expect that we're going to stay rotational between this area. So we have that lift that's happening through here, but then when we add the volume component to it, we also now have the volume of saying developing yearly with an inside break. So you can see how it's a little bit complicated going from this point here, that if the developing yearly value area high was actually up here, and let's just say hypothetically we had price action further up in here, and we have this level that was actually up through here, you can bet your ass this would not be clean. It would just be dropping straight away down into these areas, which would be the discount and the deep discount. So because of that, we've got the volume side of things, which is pushing it down, and it doesn't just end there. It's happening pretty much across the board as well. If we go to the quarterly, we also have this previous, let me just remove some price action to make this clear. We also have this previous quarterly value area low down through here. So we've got that yearly that we've rejected a little bit higher, but we've got the previous quarterly value area low as well that we've also just rejected. We're marked down on the developing quarterly as well. And then on the monthly, you can see that we've had a few levels that's also made this a little bit of a chop shop. So what I mean by that is we also have, so we've got, this is the last monthly that's gone in. We had the monthly before that's gone in, and we even had the monthly before that one that's gone in. So with that, you can pretty much see that when we had this absolute mess that was going through here, it was trying to contend with 2 previous monthly value area lows. So we could call it a 2-month value area low, okay? Then we've also had this failed auction. So a failed auction is where price gets above a level, falls out the other side of it, and you're like, well, that's no good. Because if you're reading the market, it should have sustained in there. So we zoom in on here, you'll see that we have the 8 and the 9, obviously extended from this run. But in a perfect world, with no real true resistance, if this was to act how it should act, this pin bar should have been absolutely beautiful to push higher. And that would have shown a very, very healthy low supply and good buying demand that's stepping in. But obviously, even if that existed, it was coming through with all of those old monthly value area lows, acting as a supply point, meaning acting as an automatic sell point, as a take profit point. Smart money, even who went long from the lows, would be taking profit from those areas. We've rolled back over. Then last night, this one's a little bit of an interesting one, a bit of a liquidity flush. So a lot of people have been going short. If you're anyone who goes on X and that sort of thing, there's some big names on there calling for levels that are lower. We potentially will get to those levels. We may not. We're with inside deep discount. So at the moment, for me, it's just understanding that I'm going against the volume levels, which we've just discussed. So I wouldn't just be taking any old long in here like I normally would, because I have that high level of understanding with the volume side of things. But this was a liquidity flush of a lot of shorts that got stopped out, obviously immediately overextended, and we've rolled back over again. And what's the main reason that we kick straight back down through from here? Well, we just take a step back again. We got kicked back from the developing yearly value area high. Okay. So you can see basically this is why we're getting this price action, is because we've got these levels, we've got the monthly, we've got these quarterly levels, but we also, again, if we flip this back over and we simply just look at price, it's a place that we should be buying from. Does that make sense so far with what I'm saying, everyone? Pretty good. I'm getting a few nods.
Yeah, I'm good, mate.
Yep.
I'm good.
Excellent. So there's times where
my question is, other than we're in deep discount,
Mhm.
the market is behaving as per you understand.
Correct.
Cool,
Yes.
thanks.
So, Paul, essentially, there's times where people will say, oh, why is this price action so shit? Well, this is how you can find out.
Now, I was
Okay,
starting to feel in the last couple of weeks it's done something different. It didn't on the first drop. On the second one of last week, it was a bit marginal for me because how it dribbled down. But it was enough for me to go all the way out to USDC. And that's big for me. So if I was, what you just said then is exactly how I was reading it.
Excellent.
So other than, I thought there was
Love
a
to hear
pattern change, but that's not correct. We're just in deep discount.
Essentially, yeah. So you're going to get, like, this is a way that you can determine. So here's the thing. There's times when, you got to know when to hold them and know when to fold them, right?
Yeah, totally.
And we need to be quick. So the thing about trading is to stay solvent. We're not going to win them all. I don't win them all. I get stopped at all the time. I'm human. Okay. My goal is to win more than I lose, but my even bigger than that is to know when to go, fuck this. I'm going to go and leave the office and go outside for the day. I'm going to go and do something with my day, because and instead of me sitting at home and ending up with a hole in my account and just sitting in the office like a sad person and then going to bed feeling shit, I was able to see the potential of what was going to be the outcome and actually go and live my life. And not a good day in trading, honestly, guys, is a day where you are basically, especially if you've traded, you've broken even. Okay. It's weird to say, but that's pretty much, as we're losing money, it's obviously harder to make that money back. Yeah. So with this, it's you've got the price action stuff that you learn. It's quite simple. And a lot of people are stuck. This is very two-dimensional. Okay. So this is the kind of stuff where if you knew what I'm showing you now, you would just assume that there's these chaotic moments in the market, and they still do exist at times. But having these sort of two levels, and when I say the two levels, when you've got, your naked price action, but you've also got your volume side of things, and then from there, you can pretty much put them over the top of each other, you can make a little bit more sense, sort of about what's going on. So for instance, if we were just to take a step back for a second and have a little bit of a look here, and we could just move our way backwards, and we can sort of see with both of these things, and if you've got them quite accurate, you can sort of see what's going to happen. So when we can't do anything with this because this wasn't a part of the range, yeah? So we pretty much just need to say, if I start talking about anything that happened prior to that, I would have to have a crystal ball. So pretty much from the moment that you've decided that that nine's gone in and it's pushed up, and maybe this candle here closed or this candle here closed, you could say, and we've removed the LTVW for a second, we just looked at drawings. Hang on. Just want to hide indicator. So if you saw this go in and you drew that in, from there, actually, we'll just say, let's go from there. Let's make this a little bit more realistic, okay? Say this went in, it's come up to the 50. Let's have a look at this one. Now, why am I saying that? Because plenty of times past, we're not being too much of an oracle, too much of a smart ass going, oh, hindsight over here, Mr. Hindsight. But let's just say this has come down. We've now assumed the range is going to move forward from here. Okay. We've come up and we've hit into that premium area, but we've come back down to this deep discount. Now, what are the rules? What are we allowed to do in deep discount? We're allowed to buy. Yeah. That's what we're allowed to do. That's where we should be buying. Do we buy where everyone says that this is going to all-time highs up through here? And this is where everyone starts getting a loud mouth. No, we don't.
Many times.
Yep. But what do we do when we get there and everyone's being a loudmouth and not in a position? We wait. It hurts, it sucks, but we wait. And if it does keep running up all the way up through here, too bad, you missed the move. I missed this move. There was a breaker block through here. I went to bed early. I knew it existed. Woke up. I could have captured this move. I didn't. Did you hear me coming in and having a cry about it? No, I didn't. It's because I knew that there would always be another opportunity. There always will be more opportunity. So my point being is, let's have a look at this low and this deep discount. By itself, it could just be more of this type of action going on. But if we add that extra element, the LTVW over the top, what are we to the, and let's take the drawings off again. What are we to this at the moment? What kind of state are we in when we're above value?
Imbalanced up.
Correct. We're imbalanced up, yeah? So while we're imbalanced up, the general rule of thumb of this standalone is we need to assume that we're going to keep going higher. When we're balanced, we assume we remain balanced. When we're imbalanced up, we go higher. That's just what we do until we don't. If we live by that rule, we will eventually get caught offside. We will eventually get stopped out. If you're taking profits, that is smart. But while we're imbalanced up, we need to just assume we're going to keep bouncing off the very top of that. And let's go and take a step back and add the price action again. Deep discount. Let's say we waited for this 9 to close, putting the double DAX doji in down through the bottom here. We may have, Zaki was one of them, waited to get past this breaker block down through here, which we can, if any of you guys are unsure about how a breaker works, we can talk about that in a second. Wait for a test back inside of it, and then you can start to capture the move a lot higher, okay? Now, how we added those two together was we waited. We waited for the buy point, which is the deep discount, but we also needed to make the assumption. See, a lot of trading is about assumptions. We need to make the assumption that we're going to remain imbalanced up, and that's exactly what we did, and we put a new all-time high in. It's pretty straightforward. That's very mechanical. By this time, when we're pulling back down through here, a lot of people are thinking, oh, we cooked, and you're hearing people who are just doing price action going, this is done, this is over. From over here, we've got a lower high going in. We're going to lose this low down here.
But you have higher low, though.
Yeah, exactly. And that was the thing through here. If we look at the bigger scheme of things, high, low, and then those who are really zoomed in, they get on the lower time frames. That's the type of people who are going to be going, oh no, but this, here's the high, here's the swing fail pattern. This could be the start of a triangle, or this could be the start of a rollover, and all-time highs are in. They were calling the bear market from here. Remember, everyone here was calling the bear market as well. Everyone's calling the bear market again. This time, a little bit more serious with this price action. I will give them that. But at the same time, if last night was actually a liquidity flush and the true intention of the slow, genuine level testers are coming in, and we did slowly creep back up and push up through out of here, then again, we're just showing that, a compression basically could happen into there, and a very ugly compression at the moment. But nonetheless, that is sort of just where we're sitting at the moment of, should I be getting out of the market completely? That sort of thing. Well, at the moment, while we're sitting within the price range and while we're still sitting the upper end of here and not showing any full rejections, obviously getting a little bit concerned after yesterday's close, but that's sort of the thoughts of we're still within inside a range in the high. So it's sort of just a little bit of the way that I'm sort of just looking at the market, and that is also the explanation as to why the price action's been shit. But you can see that this was a good trade setup through here, and basically the crypto gods gave us that really good confidence setup that came in down off through this order block, off the 50% of that order block, which is a breaker block. Does everyone in here know what a breaker block is and how it works?
Please go again, just to be sure.
Go again? Okay, so price action. Yep. So when we have price action and it's moving up like so, and if we were to see this as a PD range through this area through here, we'd get that nice down through the bottom. We'd get that, basically where it's turned back up to give it a go. In this case, see how it was like people were buying at this point. So you have this point down here where people have been trying to buy back up. And I mean, let's move it up here further. Let's just say if this looked more like it came down, it came up, and it came down through here, this candle that bought up through here, that there is full of people who went long. And I'm talking about this
The white one, yeah.
area down here. So that was the last stand. And then we had that big capitulation candle, which made it really clean and simple. Now, let me just say, if you have a block, right, and that's the last up buy, and it slowly sort of fucks around in here, and then it goes, this is generally weaker because there was enough time for people to balance everything. But when you see it pretty much just drop like a weight, it didn't give anyone in here. We'll put a P-shaped profile in just for order flow guys. It had no time for these guys to get out. So we can make the assumption, what's the assumption that this block here is going to do when, and that's, we're at this point here. What do we think is going to happen when we come back up to it? So this is just a reflection of this low here. What do you think the reaction, what do you think is going to happen to the market when we get back up to a place that's full of people?
I think there'll be a push.
You think there's a push?
A push.
Yeah, but you think there's a push, but just let's take a step back. This block here was the last of buyers, and they're buyers who are now underwater. What are they going to do when price gets
Pile
back?
out.
They're going to pile out.
Thank you.
Okay. Does it make sense?
Yes,
Yeah.
thank you.
So they want to get out of the market because they've got mortgages and stuff to pay, and they haven't told their wife about it. So they're sweating bullets, you know, for 4 or 5 days, 6 days, and then they can finally get back at a break even and go, fuck, I better smart up my trading. But do they smart up their trading? No, they do it again at the top, right? But this is because they're emotional traders who chase the market around like a dickhead because they don't know these concepts. So we assume, though, here's the thing. We assume that they're going to get out. But what ends up happening when we push straight through the market through this area? Now we can look at order flow, but we're not talking about that. Let's just talk about what happened. We've now gone underneath here, and now we've shot all the way up, and we've closed above. What do you think happened in this section here when we went through that area? What do you think, Paul? What do you reckon happened when we went through there?
Oh, they all wanted to get out so they could pay their mortgages.
That's right. And potentially they did. But what did the market tell us that the candle did? It went straight through, okay?
Yeah.
So while it was going straight through, it does two things. And remember, this is all assumption based. Order flow can confirm this, but without order flow, we can still assume two things happened in there. One, they got out, but what happened? There was that many buyers who let them out, but we still went higher. Tells us, fuck me sideways, there's a lot of demand here. There's a lot of people buying here, okay? The second one is on the derivatives and futures market, which can't talk about, but I can talk about this in the mechanical sense. People who play futures, they shorted it because they understand that that should have people who are going to sell in to fill up their bags into a short position, which should push the market lower. So this is just a general bearish order block at the time. It's bearish because there's people who want to get out. We can assume when we get there, when they want to get out, the people who are buying into that level, okay, they're pretty much going to be enough supply that a lot of, and this happens, a lot of buyers get to that point. And what would I personally do? I'd have a take profit in there too, because I also would assume that that order block should flood the market with market sells, right? And you've got to think, there's only so many people buying. And as we're moving our way up, there's less and less people buying and more people twiddling their thumbs going, fuck, I hope this goes up, hope this goes up. So the higher we go, the less people are buying. But in this case, it's telling us there's still so many people piling into the market. But now what do we have when we come back? I need to start moving these drawings over. Hang on, I think there's a little thing I can do. Yeah, not that one. I did it earlier.
Here's something I haven't actually asked, Chris.
Yep.
When it the order block size, that would give you a different reaction, eh? If it's a smaller size, you'd assume there's less buyers in there, wouldn't you?
Yeah, I mean, essentially, but yeah, generally the big beefy ones. But you know, we can use order flow. I've seen little ones be absolutely insane, and I've seen big fat ones do sweet FO. I've actually used order flow before to see it's hollow. So if I'm going off topic a little bit because I don't touch on order flow too much, but if I saw all of the buyers were actually a short squeeze, then straight away it's more I'd call a hollow block because no one's they're already hurt and they're gone. There's no one sitting there who haven't need to pay their mortgage, right? So we ideally would want to see open interest, and ideally we could go back and look at the spot with spot buying through there.
That's where we can go and look at it on the order flow.
The quantitative flows to actually see what made up that block, and will that block qualify as an A grade order block or a D grade order block, etc. So the next part And I'm calling you out, Paul. I'm getting you interactive here,
Oh, I
right?
like it. It's great.
The next part is
just a
we
question
can't.
here. So,
Yep.
So in the market mastery, this thing. So the candle profile, does that show you the same information that what we would probably see in a breaker block?
So what was that, mate? It's a bit hard to hear.
Is it better now?
Yeah,
Yes.
it's better now.
Yeah, it's better.
Yeah. So the candle profile indicator that we have with the market mastery, this thing, does that show you the same info what an order block would show, as in the breaker block that we're trying to explain here?
Inside MM3, we do talk about breaker blocks as well. Yes.
No, what I'm asking is the candle profile. Is that does it show the same amount of info? Usually it shows the both the sides, right, where the traders are stuck, like which wick they are stuck and all that.
With order flow, do you mean like exo charts and trading view, like the trading view footprint charts?
No. I'm asking about the candle profile indicator.
The
So
candle profile.
Oh yes, yeah. I'll let Brennan jump in.
Oh yeah. So that gives you the basically the profile of where the volume was traded. So in that candle, but it doesn't necessarily tell you if it's a breaker block or not. So breaker
Right,
block
okay.
is once it's been run through, but it's a bit hard to tell whether or not that's going to have a lot of volume in there. So
Yeah.
the
Okay, so
profile
in this
indicator
chart,
does-
in this chart, is the green candle the breaker block?
Yeah, not the green one. This
White one.
this white one through here.
Ah, okay, all right.
Yeah, because we'll take a step back for a second. What we had was price came down, and you see a few things actually happen through here. I just want to remove the price action to make this clear. This is sort of getting a little bit more higher to the analyzing side of things. We've removed the drawings. You can see that we obviously had the developing yearly value area high, and that is why people bought off it. Does it make sense? So when price came back down, we were doing that outside break with time and space, like we talked about this one at the moment. And what happened is people automatically, when we tap that, they punt to go, hey, we're imbalanced up. This could be the point that we just bounce off and we absolutely rock it. So that's another reason without order flow, we could make the assumption that there was a genuine area on the chart for people to bid it. It wasn't just sort of randomly out here in the middle of nowhere. So that's sort of an extra layer, but it's this up candle through this up candle we have here, this white one. And that's why I've got my price buying up as white, and then I've got my price as a full black one when prices move down. But we can basically, that's the order box. That's what the
So it's like
indicator's
the
highlighting.
standard market behavior makes
Yeah.
the breaker block.
Yeah. So we'll continue. Samir, does that answer your question enough, mate?
Yeah, mate. Sure. Thanks for that.
Okay. If you ever want to inbox me, I can sort of throw a few things together to help you understand a little bit more if you're unsure. Okay.
Perfect. Yeah. Thank
Hey
you.
Romps, how have you coloured those candles? Is that a different indicator?
This one through here.
Just
The white ones.
and
No, that's your OB one.
Oh right, it's just
basically
simple
it's-
order blocks one.
Yeah, just your basic order block one.
Oh, so
Yeah.
that's in our indicators.
Yeah. If you guys don't have it, I have it on every chart.
Oh, that'd be
It's this
great.
one here, which is the Market Masters Simple OBs.
Oh, yeah.
And then you can just color it. I like to keep mine sort of just
copy.
simple. Yeah.
I
So-
need to, it'd be good
So-
to make that one better. Actually, I need to do
Yeah,
that
no, for sure. And there's
because
you
it
can
doesn't
add
get
the-
them all. It gets a
No,
few, but there's a few
I know.
situations where it doesn't get them.
And
So-
that's why for you guys, it's important as well to sort of know that what I just said, like when you see an order block form, it should have something behind it, some reason. And in this case, this order block was perfect because it had the developing yearly value area high. So it actually makes sense. And it was probably a smart place for people to bid off.
and a fair value gap as well.
Yep. And the fair value gap that it rejected out of. Okay. So,
Sorry, Chris. So what
Yep.
is the green color and the blue color and the red
Okay, so
color?
the green color is the CS9 indicator, which
All right.
while I'm explaining this, I could probably turn that off. That's
Okay.
something else that I've gone over in another video. If you would like, remind me, I actually have some slides to give to you on that indicator that I ran these guys through, I think, before you were in here. So if you want
Okay.
those, you can. I've got a PDF file, and you can
Oh,
have a
that'd be
little bit of
amazing.
read of that.
Yeah.
Because it's sort of like half a lesson in itself. But again, I'll probably at some point of time when I'm in the hot seat, we'll retouch on that. Otherwise, I'll have you guys up till midnight talking.
Yeah.
And as far as the red and blue, that comes with the LTVW indicator, and that's down the very bottom, down through here, color highest volume, and high volume candles. So I've got the blue for the up and which is the bullish one, so the price going up, and the red for down. So that's basically just telling me at what point there was a lot of people buying and selling. So it doesn't always happen, but sometimes you'll notice when you get a lot of blue at the top, it means there's a lot of volume, but they're blue candles, but price should be moving higher. So without going to order flow, I can say there's clearly limit orders here absorbing those people who are getting FOMO, and then all of a sudden they're underwater and we're getting these big red candles where, you know, everyone's basically piling back out again. So it's just a way to sort of show me on the candles which ones were the highest volume ones in comparison to which ones were sort of the normal sort of standard back and forth trading. Hopefully that's cleared that up as well.
Awesome. Yeah, thank you.
Awesome. All right, so we'll move on again. Paul, when price comes back down, so let's recap just for everyone for a second. We've got, this is the white breaker block. Price has dropped heavily through it, not letting anyone get out. It's done what it needs to do down here. In this case, the double DAX doji. Then price is now rocketed, thrusted back up. We can assume people got out of here. Maybe some didn't, but we know that people in the futures market went short here, and prices closed up here. So what do you think is going to happen?
For me, it means everyone would think there was a pattern change that was going up.
Yep, sure. And with this, and you can see, let me make this clear again. Let me just zoom in on this. And actually, let's highlight this for everyone without using the
finished higher above the wick for me.
Yep. So let's just say
the white wick up the top.
So we've shifted the market condition. For those who've done the course, you understand that we want to wait for a shift of condition. So a shift of condition again is sort of where we're moving down and we put the lower low in, we put the lower high in, we put the low in. Then we want to sort of see the bulls have the strength to push above that. So this criteria ticked that everything below is ready and set, the trigger's loaded. Yes. So again, if we're now up here and we'll go back to my crude drawing, price, you can see looking at this black candle, right? So as this candle came down, it closed in this nice pin bar. It was obviously at one point or another, all the way down here was this big dirty, you know, red candle, this big sell candle through here off the 50% PD range again, guys, basically hit the discount where, you know, an ideal place to be buying, obviously, like don't diddle in the middle, but at the same time, under the right context, like we've got a breaker block, guys, you know, we want to see it go higher. It's got a shift of condition. Now, all of a sudden, this is getting to a discounted point. That's not a silly place to bid. And price comes back down. But here's the thing. So our wick got to the 50% of this whole thing where this here is now a breaker block. Price dropped through here, and we know that we have shorts offside, okay? People also in spot took profits or sold out completely, and now price is up here. So now what are they doing? Oh, I shouldn't have sold. So what's happening now? Yep, they want to get back in. So the mechanism now is we've got people going, oh, goody, I got out here. I'm going to get back in. So they're getting back in, and everyone who was short, where have they moved their stop losses?
Up to the next level.
They've moved them to their entry.
Yeah.
Because that's these original guys. Oh, please, God, please let me out. Let me out. I promise I'll never short this ever again. Okay. They're getting out at break even. Now, what does a market, so when you get it, what does a market stop loss do for a short when it triggers? It is a buy order. You have to buy your shorts back. So when it comes into here and it triggers all of these people who have got the market stop loss and everyone's buying in, all of a sudden we have this huge amount of buying.
Thank you.
Yeah?
Yeah.
Cool. So this is the structure that we had down here for this to push out of here. What's that, Samir? Might be doing something. I'll just mute him if I have to. So essentially, that's what a breaker block is. It's where we had this sort of strong up candle. Just quickly. Let me do this for a sec. Where's Samir? I'll just mute him. Okay, I'll get back onto it. Move that over.
Thanks for tonight. And how you're talking about market behavior and human behavior and emotion is really helping me tonight. Thanks.
Excellent. That's what I want. So this is sort of what I've been going over with people. It's really important to, in MM3, we teach you the dots, and now you guys are here. We're teaching you how to put them together. And that is understanding the flow of the market and being empathetic and understanding the emotion that goes into every single one of these things. So we teach like what it is in a textbook form. If price does A, B, and C, but then we understand that we have the reason for people to buy from this point down through here was because we had the developing yearly value area high. Not a stupid place to buy. But then what happened to them immediately after in the next day? Poof, they're all underwater. Comes back up. What are we expecting these people to do? Get out. So what do we expect this candle to do? Well, what else did we have in here that was a good place to take profit? So we know that they want to sell, but what is something else that people were potentially thinking at the time? And I'll give you a hint. It's right here in front of you.
Time.
Time and space. We have this happening. So people, while this was forming and started selling this value area high, they wanted to see something like this the next day. They were the people who went short, right? So when you can see that, no, that didn't happen, and you understand that this now has all the ingredients for a delicious cake that's going to send price higher, okay? So that's basically what we're doing. Now, there's one other reason, guys. Let me zoom out. There's one other reason why this bearish OB, remember, it was a bearish OB, and when we went through it, it turns into a breaker, meaning now it's changed its skin. It's no longer bearish, it's now bullish. That is why it's called a breaker block. Breaks the block and swaps it, right? What is another reason why this block down through here would, as a bearish, so let's take a step back again, and I'm talking about everything that happened when we were down here. So remember, it only turned into a breaker block at this point here when we closed up here. But when we were still down in here, okay, and this was just a bearish order block, what is a reason why it may have failed, or you could have assumed it could have became a breaker block?
The FVG prior? Or just
it's got a bit of a thrust in there, but doesn't necessarily. Okay. Any other takers as to maybe why this had a high potential of becoming a breaker block?
The short squeeze?
Maybe we looked at order flow. Okay, let's go through this. What's this up here?
Deep premium.
Yep. What's this?
Premium.
Yep. And this?
Discount.
Discount.
And this?
Deep
Deep discount.
Yeah.
Okay, so where was it located?
Okay.
In discount.
Between the two.
In discount. Not a place to be selling. Okay. Let's say we copied this out and this was formed right up here, which we actually have up here.
That's
What
where
is the
you'd be
likelihood?
shorting.
What is the likelihood of shorting that, or what is the likelihood of selling that going to do in deep premium? We probably have a lot lower chance of doing this. We have a higher chance of doing this. We could put another higher low in and go higher, but then we have a really good chance that this would have remained a bearish order block from here. And that's what this one here would likely do. And if it doesn't, my God, this thing is going hard, okay? Because that's basically saying there is no supply left to get into the way of the charge higher. So we're using this as a gauge. So when we see the things taught in MM3, such as breaker blocks and FVGs and stuff, it is so important to realize in the scheme of things where we are located within price, where we're located within the volume, which is the LTVW, okay? So it's with that, that's what I'll always do. So I've got a bit of a rule, obviously, and it's simple. It's simple. It doesn't matter how good a bullish order block or an FVG or something might look. If it is in this area through here, I cannot buy it. I'm not allowed to buy it, okay? Because it very simple was if we flip this thing upside down, which we'll do just for shits and kicks, when from this point through here, when that happened up there, so remember this is deep premium now. This is the order block, and we can't test it, and we rolled straight over, right? So that is what is more likely to happen. It won't become a breaker. It'll just be a bearish order block. Hopefully I didn't confuse with the invert scale, but hopefully you can get the gist of what I'm trying to say. Okay. So that's why those rules apply with the PD range, that it's a mechanical approach, that it doesn't matter how I feel or how good something looks, because a 1 day candle can end up looking like the worst thing. But on the, the 4 hour, it looked wonderful. It was a Morningstar reversal. It was all this, that. It had, it had all the potential in the world to make an all-time high, to put a bottom in. But then the next day it opens up and you're underwater and it looks like rubbish or you've been stopped out. So it's important to realize that if we have these rules, when we create a range as to where we do business and when we do not do business, and we simply wait and be patient. And, it was Warren Buffett that was basically saying, the stock market's a vehicle that, will basically, can't remember the exact quote, but it'll basically, give profits to those who are patient, and those who are impatient and chase price around and they're impulsive, they will lose their money and give it to the patient. So that's what these rules basically allow us to do. Okay. And when I first took on this approach to mechanical trading, I'm an impulsive person, by the way, guys. And it was a demon that I had to fight in my early years of trading, and it cost me a lot of money. But it was almost like this huge, massive eureka relief moment when something looked good and I, hold the desk, bend a bar under the desk and I want to get in and I want to get in. And then next minute, 2 or 3 hours later, price is underneath where I would have got stopped out. And I'm like, wow, I'm getting it. It's exciting. And then from there, just applying this and sticking to these rules has made me very, very profitable. Okay. Then it's almost like it wasn't taught to me, but it was me understanding, general technical analysis and that sort of thing. But that in itself was emotional control. It allowed me to start seeing these extra things I'm telling you about, where we have a higher percentage chance of turning that into a breaker block because we're in a discount. But again, if this was located up here, that would be a higher percent chance of remaining a bearish breaker and rolling
Thanks,
lower.
because no bullshit. At least half my trades I would have lost money in. I would be buying right where you're talking about, assuming it would go up to that next level. And
Well, there you go.
I've lost a lot of money and a lot of time, and I've burned a lot of cortisol.
Well, take it home with you. Take it home with you.
And thank you.
Perfect.
Getting out and just going on my stop loss and not coming down and down. And this adds a lot more weight for me because I've just got to get out.
Perfect. And it's this simple. So guys, I talk a lot of stuff about this and that. Does everyone here know how to do a PD range, or the two types of ways that I add PD ranges into my chart? So the first one, for those who don't, down this left-hand side column, under this this top one up through here, we have one in here called parallel channel. Okay, this in here. And if we click on that, it's just a normal range. Another little hack is if you hold your shift key, it'll lock it horizontal, lock it diagonal, and lock it vertical. Just a cool way to make sure that your lines are nice and straight if you're OCD like me. So you'll click once, drag it down. Now this parallel channel within inside the settings, which can be accessed by double clicking on it and going to style, you'll see that we have these settings through here. So you can use, this would be like a deviation. So for instance, if I wanted to, I can add these extra lines to the top, which I have, they might automatically by default be set this way, but it's basically just a quarter deviation out of both ends of the range. I use the LTVW. I don't really need that kind of thing. My price action's fine. I'm just looking to be rotational or not rotational. Okay. So through here, I've got this lovely pink one on at the moment. You can go through and you can just add whatever you want. I think I've got plenty of them, a bit of a mess, but whatever you want to make it, color scheme it. Essentially, all you're doing is you're making sure you've got the 5, the 0.25 and the 0.75, 0.5, sorry, and the 1 and the 0. And so that allows you to make a range. The old school way before that I taught in the course, because TradingView didn't have that feature and only gave you a middle line, sort of like the rectangle, is to go into this second area, this one down through here, normally where you'll find your Fibonacci for those who trade that. And we have a GAN box. So a GAN box is a whole thing around this, but I don't use the GAN box for probably what you'd read in a trading book for. I used it just to make a PD range back in the day. And that was simply just using this top section through here, no different. And then you can add your 0, your 0.25, 0.5, 0.75, and 1 from there. So whichever way you want to do it. If you are using this one though, or like you do like the color coding, because that sort of helps a lot of people, it probably could be a good one while you're learning, meaning red, not allowed to, blue, green, whatever you use, aqua, I'm allowed to. However you want to color code it, you can do so in there. And then if you ever draw it, it's the wrong way around, you've got this cool little reverse button that you can click on, so you're not constantly having to redraw things in. Sometimes I draw top to bottom, bottom to top, and you can just click this little reverse button. When you do make one of these, you can go down to the template section and you can go to save as, and then from there you can name it, and you can always pull it back out. You can make different colored ones. Like I think I've got a traditional red and green one, but I sort of went to I think it was a little bit. I was using these for FVGs at one point just to make a point of difference between order blocks and FVGs sort of on a chart. But that's how you do that. So that either using the GAN box, or once you sort of get the concept and you don't want to have these colors all over the screen and just keep it really neutral, you can just do that. And then the rules, again, we'll just go through them. You've heard me say it several times tonight, but generally, this isn't a place for buying up through here, which is your deep premium. Your premium, not a place for buying. 50%, be careful. Now, there is times to bend that rule, which I sort of discussed. When you sort of have reason to, such as like, it was the, if we were to put, we'll go back to our breaker down here, and we'll throw one of these over it. And we've got that close above it, and we've come back down to the 50. We have all the reason in the world that I want to get in, but where do I get in from? And if your rule's still like I need to buy from discount, or 50% might be like, I've got to get in this thing and I'm going to go at the 50% mark. One more little thing that I do want to show you is
Because you'd be doing that on a limit order anyway, wouldn't you?
Yeah. Well, the trade I'm in at the moment was
your
off
exact number. You wouldn't want to be timing it.
No, well, and that's right, mate. Like you could limit order all the way down to make sure you get in.
Yeah.
And it's what I did with my most recent trade. I got off the low. It was actually a limit order because I was fairly confident with my analysis.
Spending that time with you, I'm actually a bit more patient, and they do come down to the levels, even if you don't.
They do.
And
mate, there's always a pullback. Just remember, always a pullback.
There is, yeah.
So if we go, I've just gone back to where this is, and we go from the daily, and we shoot back down to like an hourly or something like that. Okay. We come right back down, basically to the 50% there. What do you see? Did we get? What was the price action through here? Yep, time and space. So 3 drive, 1, 2, 3. Standard rejection in the high volume candles went all the way up into it. We have the FVG down through here. We could chuck another channel in there, and that would probably be more of a discount through here. This is where it gets really, really hectic, but we'll keep it simple. Obviously, just let me change the color for this so it stands. I've got a lot of gray on the screen going on. Let's go back to our pretty pink. So this here, and I'll put a background on it. Just want to make it really clear. So this is our breaker block that we've been talking about in that example. Okay. And we've got the through here. It's now showing us, by the way, the LTVW automatically shifts time frame. Okay.
Yeah.
And I didn't know this, by the way. We had the developing monthly VWAP right there as well. So magic. Everything just starts to line up. All the stars line up. But the price action is we had the 3 drive from there. We had the FVG, and we had the time and space. And then what for the order flow fillers, what would we call that? We'd call it a failed auction to go lower, and it pops back up and out of it. What we call it for price action traders, deviation into the low, engineered liquidity. This is where everyone went short. And then obviously they get squeezed as it moves up out of that area. So on the daily, you don't see the time and space, but for the hourly traders and probably the 4-hour traders, there was a little gap of time and space, which means lock and loaded. Let's go. We've got that area of time and space. And then, obviously I could just press play from here and we can just have fun to see how it just moves up from there and it stays imbalanced up. So pretty straightforward there.
A weird question.
Mm-hmm.
When you hit those lines, I've been running on a theory that it's got to bump into it 3 times and then do something.
Yeah.
And it was allowed me to practice a bit more patience than the impulse and then sit there.
I think what you're thinking of is that,
because let's go back to what we're looking at. That might have happened in the one.
It could have. You're probably looking at RSI is a good one where you get it goes down, it puts the bull div in, and then it takes off, so you get the 2 dips. Or sometimes it'll piss you off and you'll get the 3 dips.
Yeah, I just have to be patient. I always go, don't get in before wait for the 3rd dip.
Yep. And look, the 3rd dip idea is you're thinking 3 drive, which is fine because we actually just went over the 3 drive on the hourly that was inside that area. The 1, 2, 3 and rollover. Sometimes it's a 1, 2 when it's really bullish. Sometimes it's just 1 when it's super bullish. It depends what time frame you're looking at as well. But obviously on that hourly, we had the 3 drive that was moving up. This here was sort of more of a 2 drive. So you're not always going to get that. But nonetheless, the point is once this shifted through the top, up through here, it was pretty much game on. That it was everything that we knew from here. The impulse moved down. We had a CS9 candle, strong amount of buying, pushed all the way up. People have gone short here, comes down. These people want to get back into their longs that got out here, and these people who went short want to get at break even, making market buys. So the perfect storm to push prices higher. from that point. And where is it located? It's located in under 50%. So it's in the discount. So it's a good place to buy. It's not a bad place to buy. It's got a really easy invalidation, which is below range low, essentially, if you want to go there, or below this sort of low down through here. But that's sort of how you put all of that together. So that's, how, we're sort of moving on to a segue as well, which I wanted to talk about, which is how to sort of identify ranges and what is a range. And we also just showed that this order block was also a range, yeah? So a good way to do that is we'll take has anyone else got any questions sort of based on that? We understand one more thing I wanted to go on with these PD rules actually before you have any questions would be the fact that we know what this is now. We know we're allowed to buy. We know we're not allowed to buy. But one thing that I want to query people on at the moment, okay, is so am I allowed to buy in here in this section over through here? Am I allowed to buy in here?
Yeah, sure.
Along, yeah.
I can buy in here. Can I buy in here?
Yeah.
Yes.
Yeah, I can buy in here, right? So obviously buying in here, I want to see some reason to buy in here. I don't just want to see price just come down and buy in there. I'd rather buy here. But we know that we could buy in this section through here if we've got all the ingredients prior to what price did and what the likelihood of something happening. That just so happened to work out it was perfectly in that point. So am I allowed to buy up here?
No.
No. Can I buy up here?
Yeah.
Yeah. Well, if it breaks
Yeah.
out,
Depends.
yes.
And you can. So do you see how we are rotational until we're not?
Mm-hmm.
But once we get above or below, right, we can then, what do we want to see to be able to buy from this section?
A
A
retest.
bounce of it.
A retest, an
the
outside
bounce of it.
break. What makes up that? Time and space.
Mhm.
So we can become a buyer off deep premium once we've proven that we've actually accepted above the range, retesting the range, or if you want to be a bit of a stickler, because sometimes you get those little cheeky ones that come in and come back out like we saw, we want to wait for the actual deviation. Now, have you guys seen my rules? If I just jump into the Discord, and we've got this section called cheat sheets, by the way. Have you heard of my 3Rs before?
No.
Okay, so the 3Rs, and this is sort of how I have to use this scalping, and 3 drives or 3 divs sometimes get to me, but it's not the point. The point is I give myself, when I come into a level, so by the way, I want you guys to picture for a second. Actually, let me see if I can do this. Hopefully it's not too big of a file to do this. Where are we? Can I load you? My file's too load. Hang on, let me see if I can make it a little bit smaller. Okay, we won't do that. But what I want to say is this section through here would be what's happening here, okay? So see this point up here? We've broken out of what was a range, and I want you to picture this here. So if I was just to sort of draw the rest of that in, this was this through here. Also got to do this again for the pen tool to work. This section through here, this was our range high. So this is the premium discount in here. Okay. And we've already done this whole thing that I just said. So the first thing I'm looking for is a reaction. Now, you guys know I use auto flow for that kind of thing. I'm looking for, B-shaped profiles. It could be a Morningstar reversal. It could be a couple of hour CS9 for you guys who know the strategy, a perfected 8, a perfected 9, whatever, however you come to the conclusion, reaction is step 1. So if we get a strong reaction off a level, this can be our first trade attempt at the level. I like a sharp drop and a quick bounce. So what I mean by that is I like to see price go doop and push straight back up. So it's leaving
on
behind.
what time frame though? Is it?
Okay, it doesn't matter. I don't want to confuse you
doesn't
too
matter.
much. And if with the order flow stuff, some of you guys will know I don't trade time frames. I trade live flow.
alright.
I trade literally how the market is hitting a level, and I'm watching people getting trapped, and I'm watching people or limit orders coming in and that sort of thing. I'm reading a book basically. So, but for this, it could be someone could be looking at a 4-hour for direction, monitoring a 1 hour, and trading a 15 or a 5 minute. Okay, so there's a many ways to skin a cat. This could just be for a daily time frame trader, seeing a break above the level on the daily time frame, and then waiting for the hourlies or the 4 hours to do this. So it could be a Morningstar reversal. It could be hour 1, hour 2, and hour 3. But essentially, when I say reaction specifically to me, if I've got a really good level and I've actually got that from somewhere that's like the level, and it's not very often this happens, but when it does happen, you feel very good about yourself because you're getting really low. I'm looking for that level to hit, and if you're a trader, you probably have to limit order it because there's no way to really tell if it's going to be a good trade. But for order flow, it's me seeing a large amount of people who are shorting into a level, getting caught because there's people who are holding their limit orders of buys, and then prices moving quite quickly away from it. Or I'll even watch it just tapping into it, and I'm watching the millions go up of people who are like, the price is no longer moving. If I'm looking at, 20 million in shorts, and it only took, say 5 million to move price X amount of dollars, but now I've got 20 million and it's not even moving a couple of dollars, it's telling me that, hey, this is a time that we're probably going to get a reversal. So with that, the reaction trade is what I take first. So obviously the stop loss goes straight below the low and it starts to run off. Now there's other ways that you can tell if it's drizzling and all sorts of things, or if it's a short squeeze, open interest decreasing, so it's just short squeezing. There's no true buyers. I could be looking at something like quantitative flows and going, oh, looks this like spot's not even buying at this point, et cetera, et cetera. They're working in tandem off this low, which is good, but is there a dislocation? Is it just perps? Is spot still moving lower? I know I said I wouldn't get complicated, but this is the kind of thing that I'm personally looking at the level I'm at. But that's what I'm doing now. If price comes back down and I haven't cut the trade, I get stopped out here. Completely fine with it. Great trade. Good idea. Now, the second trade, I'm not allowed to catch a falling knife. So, falling knives is obviously where the price is moving down. It's just dropping and dropping and dropping. And people are like, this is the low, this is the low, this is the low. And then you've lost 40% of your account by the end of the day. Okay. So with that, this is where I need to let it go lower, but I'm now only allowed to get back in if we get a deviation or a failed auction for order flow traders below my level of interest. And then we get some sort of reclaim, and then I'm basically re-entering probably at market. I'll market order in to try again. And a lot of the times, this is actually the trade that plays the most. We call it a mousetrap setup. Sometimes it's not as clean as this. Sometimes it might be for a while. It's sort of coming down the level, doing this, and then it drops. It's also known as accumulation, manipulation, distribution, which I've got videos about. We can do another lesson on those in itself as well. Doesn't really matter what it is. This is a simplistic way of saying I want to get that first touch is best. A prop trader from America taught me first touch is best. So it's a level that no one's touched it before. First touch is best. Get in off that because you obviously got the best thing about this is easy invalidation. Meaning you can size up and you can have like a really good stop loss sort of right in there. And you can do this. The R that you're going to get from this. What could be a 5R could turn into a 50R. Really quickly. So I need to lose 50 times before I move backwards. So I can lose, 12 of these type of trades, and one trade comes in and pretty much just smokes it. I've got a 50R on top of that. So that's sort of that level of it. But the next one is now prices move below. I've been stopped out. Now I'm waiting to reclaim the level. So it's like a mouse trap. It gets the impatient. I was the impatient. I was aware of it. And then I try again. Price tries to move away. This time if it drops below, I move into the third R, which means reassess. That could literally mean at that point for you need to get up off your computer and go and do something else. I want to give time for the market to breathe. We can't talk about shorts and stuff, but for the theory of it, reassess could actually mean an outside break at this point and a continuation lower, dependent on where we are in the PD though. If it's below a range low, like I said, this wouldn't be, if this situation was hypothetically what we're talking about being in that it's, where's my chart gone? Must be this way. If it was, we were talking earlier on about getting above here where we can take trades. We're getting that first test, doesn't work. Second test, doesn't work. Then something like this goes back down to here. That sort of makes sense from that point there. So that would be the market showing its hand. That could be the reassess, but I can't actually talk about that kind of stuff by law. So you can just understand hypothetically. We flip this upside down. You'd ignore what I said here, and we'd talk more about this being the long from the low. Hopefully I didn't confuse you. But reassess can also just mean it's the thing that's going to make you step aside from the market so you're not going to make a stupid decision where this thing's going to just keep doing these ones. And you're going to get stopped over and over and over. So take it for what it is, but I've been using, that's a part of my rules. It's a part of my playbook. I can go for a reaction. I can go for a reclaim. If I get stopped out of those 2 trades, I then can either be waiting minutes. I could be waiting, hours. I could be waiting for another session. I could be waiting days. That is my approach to it. That is how I stay solvent in these markets. Okay.
So for taking a long, so you either wait for it to go back up above the range again.
Yeah. Yes, that's correct.
A third time, or you wait it to go all the way to deep
So
discount.
it would be, let's just say that we weren't successful in getting into the best spot of the market, which is ideally when you get more advanced, it's down here. Okay. So a trade from down
That's
here.
the sweep, yeah.
And just like a little cheeky one for you at the moment, is actually this trade down through here that I got. As you can see, this is our latest low, and I got down in off there. So that entry there, I just want to refer that at the moment, is actually here, down here. Okay. So again, it's doing that. Actually, it might be better on here to show you. So that's this low down here, and I got in down here. Okay.
Wow.
So, but the next one would be here.
Yeah.
We haven't even touched it yet, guys. We don't have the best time and space in the daily, so it's not neat and tidy. It would have been better if this held higher. But for, maybe the 4-hour traders, we might have a bit of faith. What do they look like down there at range low at the moment for an inside break? Still not great, but we have a little bit. We've got some poor lows, an order block sitting right of it. And we have the CME gap as well. I don't know if you guys have heard much hype, but, we haven't quite closed the CME gap, which kind of comes right in off that order block there, which is a level off here and the range low. And this is why I'm still quite bullish, even though the price action looks terrible. I mean, you look at the 12-hour and you go, holy, that looks horrible. So at the moment, I'm sort of like, if I get stopped out of this, a little bit of profit, I get it. I'm okay with that. It's just my rules. I'm not emotional at all about this. But if we, and so to answer that again, let's just say we weren't able to get in down here. We weren't trading that day. And then price has moved up really quickly. Now we're up here and we're thinking to ourselves, oh, please come back down into here, or at least come back down into somewhere in here. And maybe there's a breaker block like we just discussed, or an order block, or something that we can get in on. It could be a 618 Fibonacci. It could be all of the above. Okay. We don't get that though. It's stupidly bullish. And that's also a really good sign that prices, if it's stupidly bullish moving up, it means that price is highly likely to really go a lot harder than if we do pull back to here. Because remember, it's showing that when price is moving quick without resistance, there's not a lot of supply, and the demand exists. It builds on FOMO, and it basically rolls on itself and becomes a freight train. And that's how we have some trends that just drizzle up slowly, and we have some real parabolic trends where, like gold, everyone's lining up outside of bullion in the morning for it to open, that sort of thing. Okay, but to go back to what you're asking is, if you come through here, it would be the 3 R's. Basically, would be, I want to see the time and space first through here. Okay. Then what I want to say is I would like to see a tap off the top of it. And this would be the trade I'd get in on. The next one would be, doesn't matter if it comes down to here for a bit. The next one is getting in.
Another retest. Yeah.
Another retest, just to see we're on here again. Because why can't I get in anywhere in here?
Because it's premium.
Correct. It's the deep premium.
Yeah.
I'm not allowed to. So it's just like, I'm not allowed to, it's funny. I'm allowed to get in anywhere up here, but I'm not actually allowed to get in here. Yeah. So it's making sure that this can be what's known as engineered liquidity. So they just want to get a few people offside. They want to get a few people stopped out, because here's the thing. I know a few of you guys suffer this. You get into a trade, it's looking good. You think I move my stop loss up here, it comes and takes you out, and then it runs off again. Yeah. Same thing up here. It gets to the high up here. People have got in down nice and low. They say to themselves, I'll move my stop up here. We're laughing at this point. It's going to keep going. They get stopped. Price moves. Then when price is up racking all the way up here, the people who got stopped here, I can't take it anymore. I've got to get into the market. They get into the market on FOMO, and then it does this one to them. Okay. It's designed that way. So when we know that we're on the outside, we've got the 3 R's, which is basically from this point that we've had the time and space. Tried that one, didn't work. Come down through here for a bit, tapped off here, did a bit of an AMD through here, shoots back up, get a touch of some sort, or what have we seen here that we can get in off? Then from here, it starts to move up. Winner, chicken dinner. We got back in pretty much where we got in here. No harm done. But if this section through here doesn't happen and it just comes up here and it rolls back underneath, it's done. I'm not interested anymore.
That's it. Okay.
That's it. From there, I'm going to wait, reassess, let the market breathe, let the market create some new structure, and that sort of thing. And then from there I can reassess. So, you know, this thing could go back to being rotational again for ages. And you know, let's go and have a look. Well, you know, we pierced the top of that. We've gone to the low. We've come, you know, if we push back up again, we're as good as rotational. There's no point to talk about a new all-time high. While we're rotational within this area down here, we need to assume that we are just going to remain rotational forever until we see a break. So once we get a break below the low, then from there it starts to look pretty bad. And then as a price action trader, you might say, winner, winner, chicken dinner, I'm going to go for the downside type of trade. But as the LTVW trader, you might say to yourself, oh, hang on for a second, hold the phone. What do we have in our way? So at the moment, we've still got we've got quarter, what am I on at the moment? 12 hours. So we've got quarter 2 value area high through here. On the monthly, what do we have to the left? So you just want to be having a look at those levels and going, is anything going to trip me up to actually be? So we bounced off the VWAP of this old naked monthly. It only had one tap on it, so not quite naked. Naked, by the way, is a terminology used when a level hasn't had any touches. So this month down through here, because it's never been tested, it's called naked. When you hear me say naked, it's a bit of a funny thing, but it's what they call it. And yeah, so we can sort of look at all these different things. Like, you know, we've got the go back to the yearly.
You got a naked pot too.
Yep. Perfect. So at the moment, we've got the developing VWAP. So my line in the sand, without looking at too much and being very daily, very high time frame at the moment would be, even though we might lose the blue range low from here, and we bounced off this one, which I'll talk about after. I want to move on into that because it's sort of talking about identifying different styles of ranges. But what I wanted to talk about was the developing yearly VWAP for me is, and let's take a step back again, we could put extra lines through here and make a deep premium, a 50%, and so on. You know, it's still a range, just to blow your mind. Volume profiles are a range. Yeah. So the previous ones, I mean, realistically, you could probably just put something over the top of one. And look at that, 50% lines up at the previous year VWAP, and you've still got the same concept. Just it's not based off the candles, it's based off the volume, okay? So everything's a range, okay? So when we're looking at this, at the moment, the 50% of the developing value at the moment is actually the developing yearly VWAP, okay? So obviously, discount is like a pretty decent place to buy, and we've got this FVG down through here, but we also have something else, which is sort of concern after having a couple of things, and this is sort of the analysis that I have, is when you build a lot of weight on top of something. Okay, so look at this. This is the stick. Okay, and then this is all on top of it. So when it finally has too much weight on it and it can't push higher, it gets to the point that when this thing snaps, it can drop pretty quick. Okay, sort of like a house of cards. So with the order flow stuff, the law 2 or the inside break, because we're going inside of value, in this case would be this law. Price recently accepts back into value and will attempt to rotate to the entire value area. So this box, if you guys have seen this diagram, it works with the LTVW and it works with the developing as well. So I also do have on the Discord, I just find it. I also have a little cheat sheet to show you all the terminologies and acronyms and stuff. If you do want to see that, you can use that to compare it to the LTVW market profile because they cross over. So that's just in the cheat sheet section under educational resources. But moving back over here at the moment, because of that law 2, this thing does take off. There is a higher chance we move down to here. So I don't love the idea of losing it. And there's an FVG. So you see how these things move into these things like this. I'm not expecting a reaction off it. I would expect more like drop into there, but I want to see a quick reclaim. And then obviously this becomes a greater inside break where I'd want to see strength come in and obviously hold up through here, compress and push higher. Now, let me show you something about this developing yearly VWAP. Well, if we move back in time to earlier on in the cycle, there was another case where we had quite the bounce off it.
Sorry, Chris. I think Samir might have a question for you. He just typed in the Zoom chat.
That's cool. I'll get to it.
Yeah.
But yeah, cheers. Thanks, mate. See that VWAP, how we bounced off it there, and then we also get deviations below it. That's sort of like something that I would say at the moment with this cycle, I would like to see something like that happen. And what's another reason that I would want to see this area hold, you know, on a weekly and a higher time frame? Psychological $100,000.
Yeah.
Yeah. Back to the smooth brain, not doing any of this, just going, if we lose 100K, she's over. You know, that's a big psychological level. So that's why these two come together. So at the moment, while this is all happening, you know, I wouldn't mind seeing some sort of real sharp, you know, sort of falling wedge or something into it, you know, and pushing up. Just sort of a little bit of a, you know, I'm not a pattern trader, but, you know, I still see them on the chart. Let me get to this, this question. Samir, I can't hear you at the moment, mate. So you might have something up with your microphone. If you want to chat any questions in here, I can keep an eye on it and I can I get around to answering it for you. So what's that, mate?
You muted him.
Oh, I muted him before, didn't I?
Yeah, you did.
Is he able to unmute himself? The God I did that. It's because he must have not unmuted himself before. That's cool. Sorry, mate. I'll find you and I'll unmute you. I thought you had the right to unmute yourself. Are you unmuted at the moment? Just asking. Can you talk now, mate? I'll see if he jumps in, I can hear him. I'll chat. But he's unmuted at the moment anyway. All right, so moving back on. So does that make sense so far at sort of what I'm seeing from the volume side of things with 100K in the developing yearly is sort of my things start to look grim from there. But at the moment, I'm looking at this thing and it's I don't really see an issue. You know what I mean? Like everyone's calling for the end of the world, but they called for the end of the world when we dropped below this area through here, didn't they? And we traveled down and we spent a fair bit of time and we were in Bali having a great time when we nailed this little entry down through here. And then look what it did. So at the moment, you know, sentiment and people crying about things and panicking and stuff is just an emotional response of sort of, it's a sentiment thing of noise. And we need to stay, yep.
That would lead to the thought, if that happened, to being a longer cycle though, wouldn't it, mate? Because then
it could. It doesn't necessarily have to mean it's over. You know, and
which makes sense because there's still a lot of macro sort of stuff that's coming down the pipeline. You know what I mean?
Absolutely. Yeah. And look, I just, you know, we'll have Kyle to chat about this at some point. He'll bring in, you know, things like quantitative easing coming back in and rate cuts and this, that, and the other. He'll talk about all the things that are sort of showing that there is the potential at the moment for a detachment of the. We're getting a bit of a detachment from the traditional 4-year cycle. So we're at the 4-year cycle point at the moment. So there is a bit of a chance that people automatically offloading because with the 4-year cycle, that's sort of just generally what you do. Yeah. But this could just be that moment of the offload, and then, you know, it smoothens back into no, this wasn't actually high, and then we're off to break the new 4 years.
Just regarding that, if we've got a lot of offloading happening, and you've got a lot of guys that have been holding for a while that are offloading at this point, we're getting a fair bit of absorption then too, which means that once this absorption finishes, we could get quite a run.
Exactly right. So, you know, at these prices of, you know, around 108K, there could be a threshold of going anywhere between 100 and 108K, you know, hedge funds and stuff saying you buy. You sneakily accumulate very slowly and you buy the books up. You buy as much Bitcoin as you can. You break it up into small accounts so no one can see, you know, one person accumulating or one bank or one whatever. So this definitely could be an area of accumulation. And, you know, just we get into these sort of messy lows where all of a sudden, you know, and as you said, it could come down and go to this FVG, you know, could have the full rotation, but it would just start to look a little bit iffy. But it is a hard call at the moment. Traditionally, it was the 4-year. There wasn't anyone big involved, but now obviously we have, you know, the big boys coming into play and ETFs and, you know, CME. It just had the highest amount of open interest the other day, which was higher than, you know, Binance and all the other exchanges. So, you know, that's why I think
it also depends where you measure it from too, because like we all measure the bull market from like the bottom or the top or from the halving. But if you measure it from when we broke all-time highs, we're still kind of midway through the cycle or the ending part of the cycle. Like
everyone's going, where's our alt run?
So like if you're measuring bull runs from the break of the previous all-time high, then we aren't there yet. So
yeah,
well, I mean, I think you got to look at other things too. Like you still got your Tom Lee, still got your BlackRock, still got your big outfits buying in. They're not fucking bailing out, you know. And so, is it a manipulation for them to fill their bags as well?
People are pulling up things like, oh, BlackRock sold 100 million yesterday, and I've seen days with 700 million inflow. I mean, whoop-de-doo, it's just fear mongering, you know. Their clients going, let's go buy gold at all-time high, and they're waking up crying.
It's not their clients buying gold.
That's all it is. It's not BlackRock selling. It's just that BlackRock gets told by its client that it wants to sell. That's it.
Yeah.
That's the thing.
Remember, BlackRock just makes money out of fees. That's all they do.
They're just a big exchange, biggest in the world. That's all they are. So it's important to realize BlackRock isn't making decisions. It's the individuals who use BlackRock to invest. So it's still pennies in the scheme of the inflows I've seen before anyway. So, you know, for those who are going on X and starting to get like a little bit, you know, you're getting the ick that the market might be rolling over and stuff. Anything can happen. It will happen. It could be a small bear market we go into. But the point is, like, a lot of the time that stuff is just like it's people are just being hypochondriacs, and a lot of them may have grabbed a great short and they're just trying to push the market down to profit. You know, so especially if they've got a big account, they're a big influence. So I personally use X to shitpost on and have a laugh, but I don't go in there looking for alpha. And don't get me wrong, there's a handful of accounts that are actually really good and they're, you know, quite hidden. They're not your big influencers, but I just go in there to have a bit of a laugh. I don't go in there to get spooked out or freaked out or start questioning, should I sell my entire bags at the moment? That's a decision that I need to make myself. And at the moment, we're ranging. That's all I see at the moment. We're inside of a range. And until that range is broken and I see some real bad things, it's just another day for me at the moment. And it's been yucky, but I've explained why it's been yucky. If this developing yearly value area high was up here, I don't think this price action will be half as disgusting as it's been. So it's sort of just like we're in a corner of like strong buying from where you're supposed to buy and strong supply from volume, where almost automation and stuff is just going to be pushing out off based on under level sell, above level buy kind of situation. Becoming balanced again. So yeah, that's sort of led to that. We can talk about ranges now. So the most standard ranges, the ranges that you're taught in the course, are essentially done from, we've got this one here. And it's basically just like we've got this high, we've had this strong seller from down through here to the low. And by the time that we're coming up and we're putting this area through here, it's really simple. We're pulling from the high and the low. And you could say to me, well, hang on, like, would a range be from here? Yeah, it would be. It's not really a big deal. But what I do want to point out, okay, is all you need to do when you do a range and you're thinking to yourself, there's got to be a way to do a range. And remember, they're gonna evolve, right? It's gonna start off, this range here would have looked something like this down through here. You know, this could have been the range from here. And we draw this one out to the side at the moment. We can pretty much see that we actually just tapped out a deep discount. And we're getting choppy around the 50%. Is this a good range through here? Yeah, it is. There's nothing wrong with this range. I've done this before where I've decided, hang on, my range is not as good as this range. But what I like to see is I like to really see, and, you know, I do a lot of, as I do lower time frame trading, I'm actually going to be looking for stuff that's a little bit more localized. So for me, I'll do something like this. And what I'm going to do though, to qualify it, is go, as it moves on, by the way, so obviously this and this needed to exist, and none of this matters. But when I put the range in, I want to say, where am I getting the touches? Where am I getting the body closes? So through here, obviously there was resistance coming into the deep premium. We dropped into this discount. We pushed back up. We've moved back down into the discount. We've kicked out the premium, moved into deep discount, kicked out of discount, looking bad from here, moved right down to the bottom of that. But if I were to sort of finesse, you know, my levels a little bit, then I might see something where, well, hang on, through here, we can see that we had, and this would be a lower time frame, where this little kickback under here, a failed auction, retest of this level, and a push down. So my range and your range and everyone's ranges aren't going to be the same. The point is the analysis that we come up to create a hypothetical to trade off needs to work. And what I just showed you before would be, this would be sort of that reclaim of the area, you know, the SFP on a higher time frame off here. But if I pull it down through here, it still wasn't a bad place I bought deep discount, yeah? So as far as these ranges go, you'd say, well, hang on, why aren't you adding that one in there? Well, let's have a look. We can add it into the top at the moment. We had that rejection right there. There's nothing wrong with that. at the moment. Generally, what I'd like to see though is I want to see it move away from a level before I actually would incorporate that low down through there. But at the moment, the way I'm just seeing this from this point through here would be the deviation of the high through here, the deviation of the low down through here, and looking for a bit of a retest, ideally off, I mean, Coinbase has got the wick here. Other exchanges are a bit lower. So again, this also adds a little bit of confusion to it, but I've got that push right down, and it also added in that, you know, we had this sort of poor low double bottom that went in here, but that sort of makes that range. I like that range. I like what I'm working with from there. And another one as well that's normally like, where do I actually do the range from? It's pretty much once you see like the cleanest ones is where you'll see a strong push and then a strong rejection. And that's like, there could be an intention of a range here. Drops down, then it moves away from it. So once you're getting almost this time and space through here, then you can basically pick these pivots off and you can test them out as an actual range. So you don't need to be too OCD. If you're going to start doing low time frame, you might have to be a little bit more skilled at really trying to read what the likelihood of where exactly you pulled them from. But if, you know, you're in the daily, the 4 hour and stuff, slight little differences of like, if I use the 9 there, if I use that low and I count that as a little SFP, you'll shift it up and it'll move hardly anything. It won't really even be worth moving it on. So that's just the sort of taught in the course, but looking for those impulse moves up, have the idea, it moves away from it. If it's Wyckoff theory, it's the automatic rally that you're basically capturing. So, you know, that sort of thing from the selling climax or from, you know, the buying climax to the automatic rally. So that's one way to do it. Now, another one that does that make it clear? Probably not as clear as you guys would like, but does it make it sort of clear about ranges and sort of where I'm looking at drawing them from?
Something else I keep forgetting to do. A lot of the guys will fib the drops as well, eh?
Yep. So, and that's the thing. Just remember what we're actually doing here. What we're actually doing here is a Fibonacci. We're just using the more rounded approach to it. But if I go the other way, and we'll see what the 618 was from here. I'm all over the shop at the moment, guys. So we can see at the moment, like off this pull, we're not even at the 50. Off this pull here, yeah. So, you know, we're pretty weak. I'm sure if I added the 382, didn't even quite hit that. Where's my
2.72? 236.
But you can pretty much see that, you know, at the moment, I think someone pulled a 618, I think, from more localized on a lower time frame. Oh, it was actually, was it this one? Yeah, I don't know. I think maybe the other day. I don't use fibs a lot. Don't get me wrong. I every now and then I'll draw one and I go, oh, look, that's an added 618. But I'm sort of doing this. I'm just more looking for the price action. And I sort of, many a times I've actually gone and found the breaker blocks and stuff and then gone, oh, look, there's actually a 618 there as well. So if you want to use it, they're great for that. But it's sort of just this with more levels.
Just for confluence.
Yeah. But the main thing I want you guys doing with ranges, though, is when you draw it in, that's not where the actual analysis like you're going, okay, that looks good and that looks good. But I just need you guys to actually be looking at sort of where the rejection points are each time. And, you know, if it's getting a bit choppy through it, you know, I probably could adjust this in question. You know, would something like that be better here? It doesn't change a lot, but potentially so. It doesn't change my low at the moment, which is what I'm working with. But look at this. You could basically just say, and I might actually start moving with that at the moment, just for the sheer fact I adjusted it, working it out with you, is something I see is the resistance through this point through here, and then how much it tried to hold into premium through here, which we know that there was a 3 drive through here, and then it rolled back all the way down to the deep discount, and then it dove down into here. And something I want to bring up next, which is an absolute ripper of a range, is the CS9 candles. So generally, I'm looking for the CS9 candles, like the 9s, where they're either in deep premium or they're in discount. And then if we were to sort of put this one in here, do I use the body? Do I use the wick? Generally, a bit of a rule of thumb is if there's a lot of body, use the body. If there's a thin little doji, means a little bit of body, I'll use the entire range. But the best way to actually do it is, say we're drawing this on the daily, and we go down onto the hourly, and then, you know, as it evolves, because obviously we're looking at it from here's where it actually happened. So we come down through here at the moment, we can see what did it actually do when it got inside here. And here's off the body, right? So we can see where would you have bought out that CS9 candle? We would have bought deep discount. We
Yeah,
would have bought
yeah.
deep discount. Then what did it do on the lower time frame along the top of it? It held, had that time and
Compression.
space, had that time and space, and then it finally pushed up and out of it. So again,
Mm.
everything's arranged, and that was a daily CS9 candle, and we're able to go where inside of that candle on an hourly time frame, or doesn't matter if it's an hour or 30. The lines all exist. You can
So
break
that'll
this
still
thing.
be good for now, even on that where
Yeah.
we are right now.
Yeah, well, that's the thing. We could do a test off this at the moment and drag it across, and it's probably a bit washed, but look at that. It rejected off the top of the body of that, fell underneath, rejected here to try and get back into it. Had an order block through here. Let me zoom in so you guys can see this. We're down on the 30 minutes, guys. We're getting gritty. You can see that we failed to get above that point, put the order block in, had the time and space, had the retest, rolled law 2 straight to the other side of value, came out down below it. You'd find other reasons. It's trying to hold higher lows at this point on the lower time frames. Had compression, pushed back through it, showed strength, had time and space. How messy is this? Should have held here, didn't hold here, went all the way back through it, respected it again, rejected here, held here. This morning, it's been trying to hold past the 50% of it while they're clinging on for dear life. And I do have the current order block in this grey area here, which is it's another breaker block I've got there.
So we could come down to the base of the deep premium, and then have a bounce.
Mm-hmm. So you can see what I see at the moment, if we were just to isolate this CS9, is you would see a couple of things going on. One, you see bulls hanging on for dear life. Now, it's, as I said, you've got deep discount buyers, and that's why you're getting so much buying. But then you've got these volume levels pushing us down. It's questionable. I'm still questionable whether this actually is true PA, or is this just a short squeeze? And the last time that there was true PA was somewhere in here. So it could, if it does move up, it can just sort of drizzle up again and completely ignore that. I've seen that before as well. I've seen it when things are getting really hot and moving. It's about to move quickly. That's just from doing years and years of this. But at the moment, like if we were to sort of say we can't even really hit premium, let alone the deep premium, are we getting a bit of compression law 10 and then we're also on the developing weekly, we're holding down. So are we likely to move down and clear these lows down through here, which is a poor low on TPO? This is also a poor low, and it's a poor low combined. FVG down through here. So could we do something where we do just drop and grab it and then trick everyone and then start moving hard? You got to think about that, because what have we not done since we've entered back inside of the range?
Is it retest the bottom?
Retest.
Yeah.
We haven't actually done an inside break yet. We've got back inside of it since Sunday, but we haven't actually retested it. So we could get the retest and then go, So it's just a hypothetical, because there's a lot going on. There's the price action say buy, there's the volume saying inside break of the developing yearly, we cooked. But this is at the moment why we're getting such crazy price action and people punting heavy shorts into the low that's causing liquidation events and that sort of thing. Okay. So that area there is just showing you the power of a CS9 order block, and moving forward, how just not any old order block, one in deep discount, still is playing true. It is a little bit washed compared to here, obviously, where they were really holding, it was really respected, but we had some really nice respected levels through there. So when you do get those, and if you haven't put the indicator on, put the indicator on, and it'll just highlight those candles. Just be mindful that we do want to still be trading them where we're allowed to trade them. It doesn't matter what fancy indicator you have on. If you have a 9, so for instance, if this green 9 formed here, I can't take the trade because it's not inside of discount or deep discount. And a lot of the time you'll be happy because it will probably be a continuation 9 and move lower. This 9 up through here, perfect. And we just, to have a little bit of a look, it's a big beefy one. So we'll go off the body again on this one, and we'll just drop down to say a 4 hour or something like that. And we'll just have a look at what happened when we got up inside it. So initially we got kicked out of it. We rejected the high of it. We held the 50% of it. So rejected, reclaim rejected, held the 50% level, try to push up, held the deep premium level, the premium level, pushed up from here, put the order block in through here, failed and rolled straight back down, bounced out of the deep discount, gave it another go from here, had that inside break here, got stuck under the VWAPs and the 50%, rolled out the bottom, see you later. And that was from all the way over there using that CS9 candle. Does that make sense?
Not trading inside that, like on a really low time frame, are you?
Yeah, I can. Well, for instance, if I wanted to get an entry off this supply block through here, and I wanted to put in, we'll just use the bodies. But here's the thing I want to make a note to you guys. Do I use the body or the wick? Try both. So if price is already in there, like I said, when you're picking a range, I want you to try the whole range. I want you to just try the body, and I want to see what's making the most sense. Sometimes you're getting more touches, and it's like, that's the flavor for the night. There's more people looking at the body on this one tonight or today or whatever, okay? So see this rejection here out of this supply block, okay? We know that, and this is something I said to you guys before, sometimes you've got to anticipate. So when I got that long off the low, where was I going long? I was somewhat breaking a rule because I was now trading under deep discount to go for a buy entry, but the anticipation was we're going to get back inside it. And I just want to jump back down to it for a second. I got in down here, just down in this area down here. How do you think I was when I was looking at this the whole time? And I actually was talking to Zaki, and we were talking the night of where I put my limit order in before I got filled the next day. And I said a good take profit point is generally immediately here because we are then risking to move lower. But I made a decision on this trade that I will round trip this bad boy for the cost of a sausage roll, essentially, for if this thing is to take off and go to an all-time high, it can turn into a six-figure trade, and it's happened before, okay? Whereas if I'm scalping every day of the week. So if this was just some sort of in-the-middle rotational trade, that would have been a take profit point. That would have been a take profit point, and potentially VWAPs or something else. So I would have had only had 25% left on the trade. Does it make sense? Two just sort of different strategies that I apply. So let's go back to this order block up through here with the anticipation that it's cooked. And the anticipation of what? If we go off that CS9 candle, we have time and space. Yeah, time and space in the CS9 candle. What do we also have? Let's move the indicator, the drawings out of the way. Rotational, inside break of the developing monthly. So we've been imbalanced up, boom, 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 coming down from here. Then we're coming up with the order block, and we're becoming balanced. Where do we go to? Other side of value, law 2. Does that make sense?
Yeah.
So we've got them. The difference with this is the fact that we actually have volume and price action in agreement. The problem with it at the moment is we have volume and price action in disagreements. We have volume saying down, we have price action saying up because we're in deep discount, but we've got an inside break. So we've got one of these happen at the moment in the developing yearly value area high. So that's basically saying we're becoming balanced again. So we're moving towards developing yearly value area low. We have the 100K at the VWAP. But the difference is price action here is in deep premium. So it works really well and really easy. And we get these really, really clean flows. But when you get it the other way around, where it's saying that down and price action up, that is where you start getting these shit farm things doing this kind of crap. And you're best to go and do something else with your day until volume and price realign. Does that make sense? I hope it makes sense. So we talked about this order block up through here. And if we were to go from the 4 hour and go down to say a 15, actually let me go back because I need to probably, if I'm going to go to 15 minutes, honestly, probably would have been just as quick to scroll up to it. Start a new one, go there, and we'll go to the 15 minutes. And we'll go look at that order block. Who here trades the CS9?
Yeah, I use it.
Yeah.
Okay, guys, what did we get when we came back into that supply block?
CS9.
Yeah.
A perfected 8 and a perfected 9 with an SFP of the 8. And where did the rejection happen out of?
50% went up to the 75.
Premium. So we had a rejection out of the premium with an 8 and 9 off the order block with 2 inside breaks. That's cooked.
Okay, makes sense.
And then what happened?
Swing.
Oof. That's what happened. And then on TPO and stuff, I can show you how, we had like a failed auction and all the rest. Okay. And yeah, I did actually do something up there. It was actually really good trade. So just can't say what I did because I'm not allowed to. So yeah, that's sort of how we can also look at ranges being order blocks. What else can we look as a range? FEG? Absolutely. FEGs are ranges. CME gaps? Absolutely. Where are we bouncing off the CME gap at the moment? Deep discount.
What? My CME shows that it's closed, but is that because you're using a different time frame? Is that if I went down to the 30-minute, I mightn't see it?
No, this is it. This is the CME gap.
Why are they so different?
If I go right down to the 1 minute, that's the best way to honestly pick it.
Oh, okay. Okay.
If you want to look, you need to go off the absolute. I pick up the 30-minute, but you want to go right off the close down there, 30 minutes, and pretty much. Okay, so I haven't used the absolute 1 minute, but 30 minutes is generally like nothing. If you go off the 30-minute, I'm pretty much going from right down there, basically the close, and I'm going right off the open.
Okay. Okay.
So you want to go off, remember, because it moved down, pushed up, and this one went down from there and it opened with that gap. So we've still got the gap in play until it moves down. So you can pretty much see that is in a, yeah.
Sorry, I was going to say, so New York will probably close that, won't they?
Potentially, yeah. That's it. And we look at price action where it currently stands. We move actually back down to maybe 30 minute, 15 minute. Yeah, I'll probably go to 30 minute. We'll reset him, and we'll also get rid of the lipstick off it for a sec. We're in balance down at the moment. Off, developing weekly. HV point of control, poor low. Connect those poor low, FVG, and all of this area through here is pretty much here.
So when you say closing the CME gap, it basically goes and touches the last price that it closed before.
Yeah. Just to close the gap completely, which is what they love to do. That's just where it needs to pass right through it. And once it's, there's times where it will do stuff like this, where it'll close it and then it will roll through it and it'll just keep going. I think that's probably been the flavor in the downtrend, but I can't remember which one it was. Maybe it was, yeah. Like there's times where you'll see, like this was a that was just a range I put in. That wasn't a gap. I think I used boxes for a gap. I think there was sometimes it won't close it completely and it'll take forever and then it'll eventually come up and actually close that gap up through here.
It depends on how strong the markets are too, though, wouldn't it?
It's like the DR strategy. It depends on so many factors. It depends on where the gap was actually. Was the gap in a deep discount? Was it in a premium? Can depend on how well it's going to close or if it's going to run. Like there is times where the market's been super hot. Like, I mean, there's actually gaps that have been left. But like, look at this, for instance. Like you wanted this gap to close and you said, I'm not going to trade this thing until the gap closes. Geez, there's a lot of trading that could have gone on in there, and then there was one further, cannot remember where it was. I probably need to go on a higher time frame. I think it was down here. It didn't close. 50% was strong enough for it. And, look at the uptrend.
Yeah.
So it comes down to sort of those factors of like a CME gap, and this is I researched CME gaps in 2018, and I was frustrated by it because I wanted some solid information on it. And it's like there are three types of outcomes. You will either get a CME gap run where it'll open up, and this is like open day. This is the same as TPO with like a test drive. So you can have like an open drive, the test drive, or reject reversal day, the 3 days of a TPO. Similar, this has 3 days, and that is either every now and then, it's quite rare, it'll just go. It won't look at it ever again. And there's a few of them. I think there's way further, 20 odd K or whatever it is. But then you'll also have what's known as a partial fill, which is like a single prints and FEGs do it. 50% was enough. And then it just retested the high of it and then it took off. And then you'll get your standard gap fill, which will come all the way down. And I've seen perfect ones that pings off the bottom, and that's all it needed. And then I've seen ones that, well, there's a few at the moment that like come up, get your hopes up, and then they just drizzle down and keep going. And then I've seen other ones that close and just keep going as well. So I'm like, what can I do with that? You know, like it's sort of one of those frustrating things that it's like, what's it going to be? And there is times where you're left sort of just standing there going, well, great, because I wanted to see it close. And, you know, I was chatting with Brendan earlier on about that. Like, are they doing a thing at the moment where they're closing them all and then they're going to print one and then they're going to just tap off the top of it or close half of one and run off while everyone's going, no, I'm going to wait for it to close. I'm going to wait for it to close, you know, because that's the kind of things they do to extract money out of us. So,
yeah,
but at the moment,
eventually we're going to leave one behind until the bear market, right?
Exactly. And that's the one that's going to get everyone.
Yeah. And I thought that might have been that last one, to be honest.
Yeah, this one here.
Yeah.
It was like, is this it?
It just pumped straight out of it, and then we're sitting there waiting. Is it going to close? It's mostly closed, and then it kind of just touches it, and like it hardly ever just touches it and reverses. So yeah, and guess what? It just rolled straight over, and I got caught offside pretty badly there. So I was
So, but yeah, apparently
it was enough.
Apparently in January they are thinking of going 24/7. So no more gaps. So
no more gaps.
Let's put a bit of no more gaps on it.
Hey, but you know what? People will still trade it and it'll still work.
Yeah. Pretty much.
Just because the volatility still is a problem. You know?
That's it. So, you know, that's another reason a bit of a thesis for people at the moment is we're getting, you know, I've told you my reasons with the price action that's dislocated from the volume, but also like every time we go up, are we getting a kickback just to close the bloody thing so we can finally move forward? You know, and it's an idea. And again, I think like this, and I have to think like this because we are still inside the blue range. And I'm in deep discount.
Can it depend on how much damage they kind of do to the sentiment by pulling it down? You know, like you say, how it drizzles, it'll close and then it'll carry on down.
Yeah, pretty much. Yeah. Like
because sometimes you'll say it'll touch it. That's right. Sometimes you'll say it'll touch it and then go, but that can be like the beach ball effect, hey, where you're holding it underwater and you let it go and it goes. You know.
Well, it can be as simple as them finishing up, rebalancing their orders and being happy with where they sit. And they go, all right, market, off you go, do your thing, kids. Go play in the playground. You know, let the retail have fun again and let the little mini whales have fun and the CME go, all right, we'll go along with them now. But at the moment, the big boys are talking and they might be saying, they're laughing, going, every time it pops up, they go, nah, not yet. And it could be frustrating in a way of like the market pushes up and they're like, no, we want to close the thing. And they keep waking up and going, pulling it back down. And, you know, so it's one of those things. It's sort of what we've been frustrated about. You know, the other CME gap was over here, you know, where we had this sort of price action through here. And, you know, it's just been a bit nasty with CME gaps. Like it's been a bit of a pain in our ass, to be honest. But yeah, that's me saying like a gap and a range can be formed with inside CME gaps, with inside FVGs and all of the rest. There's one more that I sort of wanted to cover, which I really like, and it was actually sort of how I picked the bottom, which is this one over here. And I don't know if I'm not sure if I covered in the course. Probably something I can do a little video on because it's not a hard concept. It's just a concept that was sort of like one of the early day things I learned. Have you guys have you heard of what is something called an inside day bar?
No.
No one knows what an inside day bar is? Okay, so yep. So an inside day bar, essentially, it can be any shape, but there's a specific one I like, and it's a doji. Okay, I love a doji, and I'll explain why when I get to my explanation. But an inside day bar, and let's just draw up another crude drawing before I go trying to show you inside of the charts. If you have a candle and it closes somewhat with it, you know, I like it pretty balanced. And let's say we open up the next candle here, okay, and with inside that, so you'll see this sort of you'll generally see this on the lower time frames. But what I'll do is this candle will come in here and it will close here. And then this candle here will open and it will close here. And then this candle will open. Oh yeah. And it will close here. And then the next candle will open and it will close here. And it just does this for ages and it just bores you to tears. But what was going on the whole time was we were just trading with inside of this. This is an inside day bar. So inside day bar, inside day bar, inside day bar, inside day bar, inside day bar. So I should probably get rid of that for a second. Let's just call him next. I don't want to be confusing. When we get something like this, the way that we trade it, and of course, what can you do? You can throw a range over it and it's going to show you all the bits and bobs. But what we're waiting for essentially when this happens is we're waiting for either a slam underneath it and then we have direction, or we're waiting for the best one, a wick underneath it, rotate straight to the high, and then we're looking on the lower time frame for our outside break and continue on. Obviously, we can get
so it's treated like a range.
Exactly. So let me show you this bad boy, and then let's zoom in on it. Can you see? And I remember I traded the shit out of this, and it was pretty boring for people. Do you see? Let me just remove absolutely everything. Do you see this candle through? Let me clear that. Here.
The red one. Yeah.
Yep. See this red one?
Mm-hmm.
Well, let's put where I've drawn the range on it. Let's go back to what I just said. Inside, 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 inside. Oh, hang on. We're breaking out. What are we looking for at this point, guys?
Retest.
Retest, and off we go. What do we get? Shooting star reversal. Fuck's sake. Where are we? Where do we go?
To the bottom.
To the low. What are we still doing in here? We're still inside. We're still inside of it.
Mm-hmm.
Then what do we do? Well, this is looking promising. What do we do? Reject deep premium. Oh, for fuck's sake. And it just keeps going. And it keeps going. And then it gets messy, but it keeps going and it keeps going. And then it finally does something. Okay. So these inside day bars, you'll find them sort of everywhere and they still exist, especially on lower time frames. If you open inside and you don't trade outside of the range or SFP the range, there's a full strategy around, you can get session candles on XO charts. People actually wait for the swing of the last session. It just breaks it up into the time frame. There's a whole strategy for lower time frame traders around these things, but this is a nice big daily one. And what I want to do is I want to actually go and just replay something. Let's go around here. And let's drop from the daily because we picked it on the daily. And let's say, this day opens and this day. Maybe you catch on around here. You go, we haven't even broken. We haven't swept either side of this. I've just found a range to trade. So we go down to like an hourly time frame. And then we can pretty much just see it was from, so something else, guys, if you want to know days and you're on a lower time frame, if you right click into your time axis, you can choose this session breaks. Okay. That will put lines down your chart and tell you the days. So on this, pretty cool, hey? So on this day through here, what we ended up with was this was that inside day that created our range for 7 years. Not really, but you know what I mean? It felt like that. We've come up, we put in this price structure, we've rolled over right to the very bottom, and then we've finally opened right here. Okay, so what we can see is a couple of things. Two factors to this that I'm intrigued with is 2 high volume candles followed by a bunch of price action with a bunch of offside traders in the high. What do we assume about the premium of this range? Yep.
Going down?
But what's in it? Offside people who tried to buy. They want to get out.
Break block.
Break even, right?
Yeah.
Then when we went all the way down through here, what do we also get down through here? We've got this huge wick, so we had a lot of strong demand, but we also had a lot of liquidations, so people that were taken out of the market who want a revenge trade to come back in, people who would have gone short if we looked on order flow, people who had stop losses below here, but it's now closed up here and they want to get back in. So now they are just, they want to wait for an opportunity, or they start getting antsy. And what do these people who got stopped out through here want to do when they start buying up here? Well, they meet the people who want to get out. And then from there, they go, now I'm underwater. So these new lot want to get out, but everyone from this point down through here, when it comes down to buy, the people who were patient, what do they want to do when they got stopped out? The patient ones, they want to get in. And then you just get this real drawn out back and forth type action happening. Now, how you can see it is it needs to, it should stand out like a sore thumb. So let's go back to the daily for a second. I don't just do any old one, but that's pretty significant. Hey, it's a doji, but it's sort of, it's gone and taken out, you know, it's gone and taken out a fair bit of stuff. Like if you look through other candles, that wasn't inside day because it closed above. But if you go for a bit of a look, nothing really is standing out. Okay. There's an insider that just stood out there for me right now. So we want to look at that. I just want to just quickly do this for you. By the time that we opened inside of this, because I like the dojis, right? And, you know, it's a bit of hindsight here, let's be honest, but we're at the range high. So you can already tell probably what's going to happen with inside this developing area. And that was actually the float that went in from there, Japanese float, where I got my best entry I've ever got right there. If we just, again, let's replay, we'll start a new one. Let me turn that one back on. We're going to send me back to, I'll reset the chart. Start a new. And that one was, hang on. Let's go back to over here. And it was that one there. Let's put a replay. I'll go replay here. And we'll just say drop to a 30-minute. And so you can see that our session breaks. So the next day hasn't formed yet. So let's just click through until our next day. So we've got our next day. Okay. So from here, you could have gone, you know, doji. Let's say we go and see what we're still developing on the way up from here. And so we expect to go sideways until we have either an outside break or some clear thing telling us that we're going to go lower. Okay. I've just randomly picked this. So as it's moving forward, deep discount buying coming in, holding off that value again. It's coming up from here. It's bouncing along the top. And then pretty much from here, lower time frame, we can go down. We've got an SFP. We've shot down through here. And where do we go? Straight to the other side with a 9, with an imbalance down. So this was just using price action to frame the long-term VWAP stuff, the imbalancing down, the, you know, where the pin bars are located and all that sort of thing. You see how you can use both of these hand in hand. Then obviously hindsight, we know that this thing sells off pretty aggressively, imbalances down. From there, we get a bit of a retest, chops around, it stays in balance down, and so on. And it moves down from there once it has a significant amount of time under there. Okay, that's on the 30-minute. On the 4-hour, it probably looks a little bit more straight to the point. Yep, outside break. So we had the 8, we had a really nice 9, but this is where price was also against volume. Okay, but price we have was, this would be an anticipation long like I did, but then obviously we had the time and space in this one, whereas the one I got into was not really time and space. Then we had the clear rejection out of discount, and then we nuked straight off it. And this was all framed by an inside day. Okay, I love them. I use them a fair bit. It's just a really clean way to sort of isolate an area, a high or something like that when you see one form and it stands out. Now, just want to say something here. What's significant to tell you this thing? And it's sort of like what's going on in the developing yearly inside break and the previous quarterly value area low at the moment. So we have time and space. But what makes it significant to say that this thing's going to sell off pretty hard?
FFB.
Okay. I want you to think about the PD range. Okay. Remember that what should exist in this area? Like fairly simply, yeah? So when we see weakness in a deep discount, so don't get me wrong, if this comes up and rejects here, okay. If it rejects here, yeah, no shit. It should be hard. It should chop around in here, rejects here, definitely. But when we see things like wicks and stuff, 2 attempts that can't even get its skin on the 4-hour into deep discount, it's kind of this one dumped off. But when you see it starts running out, it's telling you that the supply point's higher. Yeah. So from that is Bitcoin showing you its hand. You have an inside break. You've got the rejection of your inside day candle. And one more thing I also just noticed, what was our inside break perfectly lined up with?
Monthly value high.
The value.
Like to a T. And guys, I can't make this up because we just randomly pick one out of the chart. This is not pre-rehearsed. So, and that's the current one. Is that an old? It must be it must be like a current one. So that's my point. Like like good analysis, whether it's volume, whether it's price action, it should all line up. So if someone's out there and they're using the OBS and the RSI and they're using a whole different strategy, that if they're a good trader and you're a good trader, you should be able to come together. And you do it in the Discord where you get a good trade, and then 7 people put their hand up and they use things I don't use, and they go, oh, there was also the such and such. Oh, there was also the such and such. Oh, there was a 618 there. You know, there was a 1.618 there. So good analysis, it doesn't matter what you use. It's just up to you with what you use, how well you use it. And if you want to pile on lots and lots of different things to be more confident, you can. If you want to keep it super, super simplistic, you can. But honestly, for me, I've just found that you need a little bit of volume. You need a little bit of price action. And then the order flows for execution and some buyer stuff, which is on the advanced stuff that you guys have probably seen me gone through, and we'll go through a bit more of that in the future lessons. And if you haven't sort of got up to that with MM3 and you do find the time, I definitely recommend that, you know, to be able to keep up with those sort of lessons, that you do have a quick watch of those and try to understand a little bit of the stuff I'm talking about. But that is the inside candle. Is there any questions on that one?
With the inside candle, are you looking for a doji specifically?
Ideally, I am, because I've just found over time it works best. So don't get me wrong. I can probably find, like for instance, see this one here is an inside day. So let's just go and have a look at him, right? That candle there was an inside day. So by the third day, really, you know, it's an inside day. You can make an assumption if you're opening inside a candle, like most days open as an inside day, yeah? But by the time you've had a full candle close, then you could go, well, hang on. And all this is all we're doing with these is pretty much like I'm looking at like a daily high and a low. There's indicators that just show you previous day high and low. So this would have been previous day high and low from here, and then we shot out. But do you see, you'll go through and you'll see there's a lot of inside day candles that pretty much just smoke out of it really quickly. And I find the dojis are the ones that actually sort of range for the longest. And for a scalper, it's a dream, right? Because I've actually found somewhere that I'm confined within PD rules that's going to probably give me multiple. It's activating my take profit scalp system because I'm expecting it to remain within inside there. And I only decide to deviate out of it once I get an outside break or a full blown rejection. Falls back into here, can go to there, and if it's really bad, it can keep going lower. If that sort of makes sense. So let's go and have a look at this one here on a like a 30-minute or something, and we'll have a look at the structure compared to a doji. So with the doji, and remember, this is the first one we're looking at just before, and you see how like you've got like this high amount of volatility inside of it. This is just a quick assumption. We don't need to go on order flow, but it's a really quick way of being like, yep, a lot of people offside, a lot of people offside. A lot of people got stopped who want to get back in. A lot of people are dying to get out. And we've also got the blue candles to tell us that there was a lot of high volume within inside of this day that it was formed on. So that's why you sort of open here and you sort of close here and not much really happened. But you know, what did happen was a bunch of people, both sides of the equation are wanting what each other have. And from there, that's how you sort of end up going sideways because it's ironing out that sort of process. But if we go over to this one over here, there wasn't probably really a lot of that. It was probably more of a, did I need to hit the replay tool or is it going to reveal itself to me?
I guess it's showing indecision as well. So it's going to range, I guess.
Yeah, exactly. Exactly right. And that's what a doji is, right? It's indecision. And indecision basically means like we need to iron out like the extremes of overbought and oversold within inside of an area. Whereas in this case, we can look at, remember, inside the first square is where the candle was formed. And so here, this is how quickly this one resolved, okay? So let's go and say, remember, this was our original candle. This was our resolution day, and this was our pump day. Does that make sense? This was the day the inside. This is the actual main candle. This was the candle that did the inside day. This is the day that pumped. Now, what we had was we had a lot of buying. We had a lot of weight at the very top of it. As we came all the way back down into deep discount, everyone who went long was pretty much stopped out. Everyone up through here that pretty much was long and was offside, you can see that they were just probably got liquidated and stopped out. And then by the next day, the sticklers who didn't get liquidated, they got out through here. And then there was no more issue anymore. This cleaned up this issue through here. Whereas you'll see with the other ones though, you'll see that the issue isn't so simple. The issue isn't just one-sided. There isn't just one-sided people up here. There's these people who have issues as well. Now this one did still resolve really quickly, but it's more that original daily one that I was talking about. And I think I remember trading, because it may have been, there was something happening in the market at the time that was quite significant. I remember after that day, everyone was like, holy shit, like what a sort of a day that one was. If you go back to the daily, I'm talking about, again, like this gray one that I put in here. And obviously the candle on the daily as well. It's something else you could do is if you're using this indicator, you might only want to pick the ones with a high volume, red or blue ones. In my case, you can make them green and pink. It doesn't really matter what color they are, but you go high volume. So let me put the volume bars on. You'll see that there was a bit of an anomaly with the amount of volume, right?
Yeah.
And that's without having the ugly volume bars. It's pretty much just going, hey man, this is like higher than normal. So that's why I'm getting that, high volume, issues at the top, issues at the bottom, tries to resolve itself, and then it goes down to fix these people, and it's sort of just from there it moves on. So that is actually why, instead of picking the high and picking that low, I remembered that range and I thought, let's go and see how I did it before the low went in, and it bounced right sort of off the top of it.
So you obviously, once you see the doji, you let it run a day to see if it's going to start that ranging, obviously.
Well, okay, with this one, no, not necessarily, because it's still an inside day and like a lot went on. But like here's the thing. As I said, like everything's an inside day, but like if you guys want to call it, because it's a trading strategy that, like, for instance, let's actually have a look at the current day. So at the moment, it's an inside day, right? Let me just maybe make a fresh BTC chart. And we'll take the
it's not ranging at the moment, basically.
Yeah. So here's the current day. And then if we went and put on yesterday, previous day value area low, previous day value area high, let's drop down. You can see that we had that big push. If I put the LTVW on, I'll just put it back on for the sake of the color coding. By the way, if you guys ever want to move things to a chart without having to go through your indicator section, give it a single click till all the bubbles line up. Control C or Command C on Mac. And Control V, Control C, and it will load up. So we can see we had a high volume candle. Okay, now, what time is it? Okay, we're getting there. I don't want to keep you guys too long, but again, you guys know, like using Value and stuff, we can actually see, is it high volume from spot buying or is it high volume from liquidations? It won't tell you that on here. But what we do know from further research is Coinbase has been doing a time-weighted average price, which I can show you, which if we use this window over here, it's on the 15-minute, but here was the low. Attention is over here. And attention is here for this, okay? So low's gone in and price has moved up and Coinbase has been our hero. It's been trying its very hardest to buy. So a bit of a time-weighted average price. Buy. Binance, on the other hand, have been not great. Now, we won't talk about the derivative stuff because it can be, because this line represents market buying and selling. And that's obviously settlement after limit orders have been tapped and moved. That's sort of how it all works. But it's just market buying and selling. That's what cumulative volume delta is. And we can see in the case of spot, which is the orange one is just Binance and the blue one is just Coinbase, that is just spot. It's really simple. They're either buying or selling. Whereas with derivatives, we have to talk about liquidations and that sort of thing, which sort of makes it, are they genuine or are they being liquidated and forced out of their position? As I said, a market stop or a liquidation on a short position becomes a market buy, and on here would read as an uptick. But it doesn't generally mean that anyone's now behind that. Someone's just licking their wounds, and it was an effect of them being taken out of the market. But I really just wanted to look at spot here because that's what we're talking about. So inside of this area, we isolate this move up through here. Coinbase were buying. Okay. Binance, not so much. Now, when you zoom in, it's a bit hard to see, but if we just go right back here for a second, there was a little uptick in Binance for once. It was like maybe the most buying that they've done so far, but they eased off very quickly when we got right to the very top. Okay. What we can see is we had Bybit probably got a bit of a squeeze out of that. We can see Binance Futures got a bit squeezed out of that through there. And so we come to the conclusion, like, is Spot involved with that? Yes, they are. And, you know, we can go deeper research. How many people were liquidated through that? How hollow is it? But at the moment, while we see Spot's involved in it, then we can go back to our chart and we can say, this is a high volume bar, and it was based on people market buying genuinely in Spot. If there's a dislocation where no Spot was buying and it was just perps that shot up, then I could say there would be a higher chance for this thing just to go whoop because no one's actually involved in it. But because Spot is involved in it, that means that there is stop losses now that want to get out as we move higher. And with a market that's already moving down at the moment, that makes this extremely hard to actually get the same effect. So I've analyzed that, but at the moment we can say that this is where we're sitting. We do have previous day low, previous day high. It's not a doji or anything like that, but we do have a large amount of volume above us. And what do we see at the moment that's happened? Basically, what is it in the past 9 hours, 8-9 hours? We can pretty much. But for the buyers, what are they struggling with?
Absorption, I guess.
Yeah, they're struggling with everyone who want to get out. So we know that there's genuine people. So
they
look
can't get any movement.
Yeah, so look. Rejected from this big blue bar that we know people are trapped inside. Okay.
Right.
So just sort of this sort of analysis looking at that, I don't see this lasting really as a sideways range because the resolution for this, honestly, is everyone who's in this, just take them out. Just make them squeeze them out, like make them stop out, just get them out. Because anything like this is just going to have these people going, oh, thank God, thank God, thank God, thank God, thank God. The only thing is that if everything that made up this, comes to the breakup block, guys, there is some big player or reason for this just to chew through it. They all get out and then they go, oh, damn it, now I want to get in. And then we take off. Okay. So that's sort of everything can be an inside bar, but I like to look at it and then actually see the reason. But you see, like, here's just like a little one here on the 4 hour. And obviously, again, it only lasted, you know, well, for the next day, we opened up with inside it. But what was quite interesting is it still remained a range. Let me draw it in for you guys. It will go lower. We're going to go deeper. This one in here. So this is a 4 hour. So let's say you were trading the 4 hour, okay? You were analyzing on the 4 hour and you're trading the 15 minutes. All right. And then we'll go, might need to put I'm not going to get my session breaks like I get on my daily. Let me go back to the 4 hour. And then all I need to do, if you ever want to sort of do this stuff, there's a few ways of doing it, like trying to pinpoint exactly what it is. But I'm just going to draw a couple of little lines out this way. And it opened. Actually, I want to put that one on here. It's probably an easy way to do this. And then opened here. So then if I drop down to say a 15-minute, you pretty much see, so that's sort of where it opened. And that was the absolute high of that point through there. So I draw a line down through here somewhere. So on the 15, and we're looking at the 4 hour, about midnight right there. And so what I'm saying is this is what the price action was. Then we came up and we had this rejection straight at the very top. So we rotate back down to the other side of it. Then we've come back up and we've had a bounce through here. And then we try to hold him back to the deep premium of this point. And we move up the time frames. 15 is probably a bit messy. You can see 1 hour. There we go. Had a clean rejection there. Bit of a reclaim, deep premium and down. But the 4 hour is really clean to see. Essentially, just how we had that. I'll just for that range in again. Just how we had that range where rejection there, a little bit of a reclaim off that one there, and then obviously it's rejected those premiums and pushed down. But yeah, as we get down the time frames, things get like, 15-minute and 30-minute, things get really skewed and deviate really, really heavily. And that's what's beautiful about learning and using the higher time frames, especially even if you are wanting to scalp. I don't really want to be looking at, using a 30-minute or whatever, 4 hour, it's wide enough, but, using a 12 hour a daily and then being within sight of that. And that's exactly what I'm saying here with the daily of this one down here. It's back on this chart here. On the daily, we've got that big long one that's happened over time. And then from there, if I'm on the 15-minute or whatever, I've got a really big area to work with. And then I can find little ranges and stuff within inside of that one as well. But does that sort of make sense? That I'm looking for the high volume and I'm looking for a doji, because a doji means indecision. Thank you for that. And indecision basically means there's a higher chance that we're going to remain inside of that area, which gives bounds for rotation. And it gives a point to buy, like a point to buy from, right? So it doesn't really matter. We can only buy from, with this one, we could only buy from this area here or reclaims of the area, or outside breaks that actually give us time and space. And did we get time and space in here? This is a bit of a question for you. Did we actually get time and space on the daily in here?
Very minimal, yes.
We got it, but think about this, right? We kind of didn't, because for time and space to be confirmed or to be smart and patient would require this daily candle to close. So really, it was closed by here. So on the daily, it wasn't really actionable. But if we did, but we can say from a daily point of view, sort of like when an RSI divergence is going in, it'll blimp on and off as a divergence until that candle closes. So I want you to treat this the same way, that the daily time frame traders are not trading any time and space on here until a candle closes. So if I was a daily time frame trader and this was not this big red down candle, but had like a nice wick off here, maybe a push back up here, then as a day trader, I might be like, all right, I'm going to put my range across here, the body through here, get a rebalance through here, enter here, and then it's going to go, it has a potential of going high because then I have my time and space. But if we were to move down, and this is where things become, the lower the time frame you go, the more of the risk versus reward. You're obviously anticipating more, but at the same time, it's more risky because the higher time frame that has the money hasn't yet seen it yet. So we go to the 12 hour. Where did the 12 hour close in respect to this? Well, let's go down through it. Actually, I need to keep that. Oh, actually, I don't even need my LTVW one. We're only just looking at, we're only looking at the drawings. So let's go to the 12 hour for a second. They did at one point. So this part here, 12 hour and everyone underneath, this wasn't bad at one point. Why? Because we had our closed candle and we had an order block, and it probably looked all right. And of course we could keep moving down. So the 12 hour have seen it. Then the 4 hour kicked in. And then we had an issue pretty much with, there's an FVG, but again, what do I want to do? I want to try and look for the range and I want to be like discount. So it wouldn't even be like a really good rejection area from that point there. So it pretty much just ran out of steam from that point. Not really clear. Maybe on a lower time frame would have been clear. We did actually, the one thing it probably had in its favor was probably this BPR through here. Perfectly off the top of the BPR. Balanced price range, guys, done the course. Do you know what a balanced price range is?
2 fair value gaps.
Correct. So an overlapping fair value gap. So this fair value gap through here exists. And then we have a fair value gap here that exists. And when you get the crossover of the two, this will look ugly. There it is. But then if you just draw that one there to that one there, get rid of the other ones. There it is. That's your BPR. But where I personally would have liked that to be, just sort of looking at this area through here, you know, you can start making some little adjustments. No. Maybe if you wanted to just go off that big beefy candle and see it as a rejection, but you know, this I'm getting hindsight here, guys. You know, if I'm just going to go sort of off here or off this point through here, it was through discount, and I'm not going to do any funky business to make me look like a genius. It was out of the discount, so probably for the inverse trade there, it probably would have been a little bit more of a hard one, just going off price action. And yeah, and the deviation standard 1 through there, and there was no activated block. But like the next thing to do though would be like there was nothing on that, but if we went down to the hourly at the time when we've got the 9. And again though, we are pushing towards the 50%, so you could skew if you thought, but again, from using this range in itself, if you're going based off your rules as these are my rules, I don't want to lose money, then the trade is not there, okay? But if we want to just look at the theory behind it, we also had this 9. I'm using the entire range. Why did I say to use the entire range? When
Small body.
Small body. Yep. So if it's a small body, I'm using the whole range. But and this in itself is similar theory to the inside day bar, because even though we're not looking at an inside day bar, if we go low enough down through the time frames, we'd probably be able to see somewhere along the line within here. I don't want to get too granular with it, but it could be on the 1 minute. So you see you're getting sort of these high volume chops down here and this huge wick up through here. So obviously we had a lot of offside here and a lot of offside there. And then obviously it's resolved itself quite quickly. But again, we're using this whole range, not just using the little thin body where majority of the price action was. And we've pretty much just rejected out of the discount and then again rejected out of the discount from that point there, which shows it couldn't even get to the 50 or the deep premium, which is showing weakness. But again, it looked like it could have rotated to this high point up through here. It looked like it could have got to the premium because we also have behind it the developing value area high. So that says in itself, when it fell out of this range, it was not strong. And then we're getting like scalping here. We're getting that outside break of the VWAP telling us that we want to go to the low because we had weakness that we didn't even get a full traversion from getting an inside break. Remember, inside break, law 2. And then obviously we get like another inside breakdown, but in this case, we waited for VWAP to give in and then we could have finished that. But again, we're on the 5 minute, guys. It's not what I really want to get you guys into. I'm just using this for a more granular version of how volume and price action still works. But if I'm going to just be honest with you guys, looking at this, it's not like a very, very simple one like that recent high, which is just like boom, 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 deep premium, anticipation of this, that, and the other. Okay. So yeah, they're basically the, that's sort of basically looking at that structure through there. And yeah, we're looking at just the high of that inside day bar that we fell back in. But once you got back into there, obviously the idea is that we rotate back to the other side of value and we're at the developing monthly VWAP. Was there any chop that went in through there? A little bit of a bounce off it, pretty much came right back down to that point there. Cool. Any questions?
Hey, Romps. Do you use, or should you use, or should you not, looking at TPO, whether you're on XO or using the indicator on TradingView, can you use like a previous day or previous weekly TPO and say, put a PD range between the value area high, value area low, or am I using that incorrectly?
With what type of charts, like a footprint chart or something?
So I've maybe incorrect, but I've been using the TPO for key levels at the point of control, value area high, value area low. But I've also been looking at the previous day or previous weekly and just seeing if it ranges in between there.
Oh, for sure. Yeah, for sure, mate.
PD range in between, say the high and the low.
Yep, absolutely. Yeah, so like that's what's like sort of what I was saying earlier, that like you could put a range over the top of value, and that'll work as well. And like it'll run into like other confluences like 9s and stuff on TradingView as well. But like Yeah, absolutely. Like I've got a dedicated chart, which is pretty much, which chart is it? I actually might be on another window on here, which I sort of have all my levels through. And even though I'm not essentially, I have put PD ranges between them all before as well to sort of see how it works. I've got way too many on here at the moment, but I know what you mean. You could go from like a 3-month to like wherever I've got the 3-month low or whatever, and you can put a PD range in there and it will work as well. Did that answer your question? Is that sort of what you mean?
Yeah, I think so.
You think
You
so?
don't seem to do it a lot though. Like just finding ranges, as we've discussed tonight, is probably
Yeah, I think it's sort of like, I think it's sort of like, I mean, I think I'm going to give it a go. Like, you've sort of hit a light bulb that maybe I should check that out a little bit more. But it's more sort of, I've just been using like the price action is what the majority are seeing. And then I'm using like LTVW or the levels of, just sort of the raw levels of like TPO. And then obviously for those who, are not sure about TPO, that is, like these type of charts. Like this is the weekly one over here, where we're getting time and we're getting value areas basically with inside of here. But yeah, no, it's definitely something I'll probably start doing. I mean, we could actually, like, probably an easy way to do it, just out of curiosity. And this is going to be set to the 30-minute while I'm on the daily. Yes, on the daily here. If we've got some of these composites, like 2-day composite and like I think it's like a 3-day composite there, you can also go up to your fib tool and you can actually customize your fib tool. That's right, you got to hold in this one to be a PD range. And if you wanted to add your candles back in, you obviously could. And 50% bouncing off the low of that. A bit of rejection at the high up through there. So you could definitely look at that. Like your point of control for this day through here comes in right off the 50%. Like all this stuff sort of lines up as well. So is that sort of what you're talking about? Like adding inside value and composite? Yeah.
As I'm watching you do it, it's not as clean and as simple as the other ways you've used ranges. But I have been playing with this just to see how it goes, and I haven't done it enough yet to know whether it works or not.
Well, it's not stupid. Something else you'll get as well over time, and I've definitely noticed myself doing it. It's kind of, you're a bit of a smart ass. Have you guys ever had a tradie over and he's like, he can just tell you what measurement it is with his fingers and he blows you away? He's like, that'll be like X amount, and you pull the tape out and you're like, get fucked. Well, like essentially with these PD ranges, I've sort of got to the point now where I'll look at it and go, that's the 75 and that's the 50. Let me double check. And I'm like, oh yeah, boy. Like I know exactly that the CS9 is going to be at the 25% or whatever. So you sort of, even, I guess I'm at the point now, I do it with patterns. I can see triangles and ascending triangles and stuff without drawing them in. And it's what you're going to get when you spend literally all day, every day in front of the charts, minus the weekends. So it's the same thing. Like it's not stupid at all. Like I think it'd be good to still do this, but I think maybe I've just subconsciously been doing it. But like, look at this, like where the 25% is, where the majority, like what's really cool about this is going off that composite, we've just brought back in, this isn't just a random P candle, right? That got into this old composite value area, but instead it tried to sit along the top of the 25% and then held here. Like it's really breaking up to what we're normally used to seeing of just, it's just a point of control and a value area low. So I think it's definitely got some merit to like throw it in over the top of that and give yourself a few more levels to work with, because what we know is, and your points of control are not always going to be at 50. Maybe it's just like a bit of an anomaly that we got that, for that day itself. But it would make sense because obviously that's where the chop was, right? And then it fell out of it. And in this case, we didn't get to the premium or the deep premium. And in deep premium, obviously this blasted through last night and there was short squeeze and whatnot going on. But on a normal day of trading without the crazy, up and downs, that probably would have been a bit of a rejection point right there if it didn't have such a huge push. And that would have been where? Deep premium. So I think it's good. And for those who are using EXO, how I did this, all I'm doing is coming up over here, and you'll have this third icon down, and that one there is your fib tool. You got to click and hold, unlike trading view. You got to get used to it. But you go into your settings. At least you can double click on them. You can go to trend lines, And then through there, it's a little bit more complicated, but you just choose what levels you want. I've done the same thing, 25, 50. It doesn't have the decimal point. It's just round numbers. And then go save new when you actually name it, and you can name it into there. And each time you use it, or you're using, your normal Fibonacci or whatever, you can just swap in between the two as you load them up and chuck those where you need to do so. Yeah, so that's pretty much that. We won't go into TPO. How are we going for time? What time? 6, 7. Yeah, we've gone for a bit of time. I sort of wanted to talk about just a quick one. Hopefully I don't talk too long, but I sort of wanted to talk about just qualification within using things like which one is it? Let's go back to the daily. Let's do a round trip to where we started, which was this breaker block and everything that happened around it. And if we go back into my EXO, let me get my EXO next to this so I'm not giving you guys a headache. EXO charts. And we'll load him up. And we'll go to, first of all, let me clear. Gee, I've got some levels on here, don't I? This is your object tree as well. So if you want to get rid of bits and pieces, you can do. Get rid of my dynamic profiles. Okay. And then we're on the 4 hour at the moment. So that one there was, did I not move that? Did I move the wrong one? Must be that one I've got to move. Yeah. Okay, so on the 4 hour, yeah, it was that one. Oh, that one in there. Down. Yeah, there's that one over there. Getting there. It's been a long night. I think, Zaki, you and I may have gone over this one, hey?
Yeah.
And then it was that one back. We were doing it. Oh, actually, I think we were doing it on the daily to make it more simple. Was it the daily?
I think it was, yeah.
Yes, on the daily. Let's make it the daily instead of looking at the 4 hour. So to change these are candlestick footprints. Again, for those who haven't seen this before, just a quick one. This allows us to X-ray the candles and to be able to see where the buying and selling actually took place and was finalized with inside the candles, which is pretty kind of looking under the bonnet, so to speak, when it comes to trading. All right, one day. It doesn't take too long to load. Computer's normally pretty quick at this. Okay. And there we go. We've got it highlighted over here. So let me make this box a little bit more clear. All right, so this was our breaker block. And then through here, we can pretty much come down and we can go, okay, so what happened through here? So we had, we're first looking at the volume. We had that big sell-off of 10 billion. The next one was about 6.5 and then, close to 7 billion worth of volume. The finalized delta. So where I'm getting these stats from is I've got delta. I've got how much was at the max point, how much was at the lowest point when it was buying and selling. But the main top one is the finalized amount. We can see this breaker block, which pretty much had 123.4 million. So, and we had open interest increasing in that. Now, I am looking into some aggregated versions of this. I'll keep you guys posted, which will allow us to add Binance and everything else like that into it. So we can not just I'm just looking at, I think I'm just looking at Binance on here. So it's not the full sort of picture, but it just gives you an idea that we did have inside of this real buying. So it wasn't just a short squeeze. That is the first check that this order block actually means something. If it was a big red open interest drop with that sort of a number, it would be more like everyone who went short into an area, they all got squeezed out and then it rolled over. And then that means when price comes up into the area, there's no resistance. And in that case, this here just makes you go, maybe I won't take profit here. Maybe I will just let it keep going because there's no one in here of interest. But we know as a whole, there was generally a bit of interest. Now, normally what happens is you get P-shaped profiles, or most of the POC was in the high, but besides the point, it's more the fact that people are actually looking at sort of the body of the area. And then pretty much the next candle opens up and boof, just drops straight away. Doesn't give anyone any time, but here's the catch. Not only does it not give people time, so you probably think if it closed up here, wouldn't these people have some stops scattered through here? Well, they did, but the bulk, interestingly enough, of the people caught offside was up here. There's the point of control. And so it just dropped. So there was actually a lot of people in this area that were caught offside. Are you with me at the moment?
Yep.
Cool. So it's sold off and it's done what it needs to do down through the low through here. But then the next candle's popped in through here and it's pushed really strong. We've had a good solid amount of, again, 63.6 million. At one point there, it was Delta Max was 134 million. So what is that telling me? That's telling me that when we got up into here, we pretty much over half the amount of people who actually, so that was literally the thought process of smart money was basically like, let's push this thing back up. Let's get into, you know, the block, the visual block, the general rule of the block, the body. Let's just sell off into, this is going to be great. Let's go into there. And we'll put a PD range on. You'll let me put the PD range on. Oh, that's fine. So basically what it's doing when it gets to that point is it's getting into where? Discount. And then it sells off. Okay. Now, the next thing that happens is we see this red through here, an open interest increase, and 107 mil. That is people shorting. So there was people actively shorting out of the candle close in this area, punting that this order block, bearish order block, will push price lower. But what actually ended up happening was there was actually more buyers once we started getting momentum through it, leaving these guys behind. Okay? So that pushes up. But the real surprising part here is, you know, the 107, it could have been some people taking some profit and that sort of thing from this point over through here. If we wanted to actually look at this isolated, we can do something else, which is the dynamic profile tool. We go across. Am I getting much from that? Bit hard to actually see. We can see that some of the shorts were basically, we had shorts selling out and we had quite a few longs. What's quite interesting though at the same time is there's nothing too crazy to blow at. So I almost feel like there would have been a lot of people in here. If this is this, what am I on? Is it, always does that to me. If it is Bybit, there's apes and they probably didn't get out. They probably just stuck with it. But the point is we're still looking off that mechanism that obviously we had a lot of open interest that pushed up strong. We have this huge amount of open interest that's pushed up and closed above this point. We know that people are short in the lows down through here. So we know that these people are going to want to get out at market wherever they can. So the smart money will basically just start peppering out down through here. A lot of it got trapped offside, which got taken for a run with it. But nonetheless, we can the qualification here is the following. Okay. The following is I want this originally to have a lot of is my tool not working now? Does that to me sometimes. I wanted to have a lot of open interest that's actually coming in on here to qualify it to begin with. Then obviously this moves really, really quickly. There was no one really, there's a little bit of open interest down through here. You know, it's a bit red. There's always people shorting in the lows. It pushes back up, but it's mainly people who want to buy it. It's the deep discount buyers. Pushes up again on open interest. So what that's straight away telling me is open interest increase with price moving higher is a good sign. If it was on red, I'd be concerned that all it is shorts being squeezed, which really makes it really easy for price just to fold again, because all of this is basically just people who have been taken out of the market, force price up, and it's not fair value because people haven't auctioned up there to agree on that price. So we got the open interest increase. Then from there, obviously, we have open interest decrease. Now, why do we have that? We have that because anyone who was basically going short or going short in this area through here are now basically getting out. And that's obviously this through here isn't necessarily shorts opening where the open interest decrease. It can actually just be things like people who longed up in the top closing, can be people over here going, oops, okay, we're definitely falling through it, getting out. And then it can also be shorts getting out on the best average that they possibly can, which is pushing the open interest down. And then from there, obviously, we take off with more open interest increase. So do you see how we spoke through a lot of things, but the key things that we would be looking for is the order block on open interest increase? And that's the first tick I want to see. If I see a full daily candle or whatever, and everyone's looking at, say, a breaker block or an order block, and it was all on decrease of OI, I see that thing is as good as not existing. So price can freely move through it.
So do you have extra buying there as well, Romps? Is that right?
What's that?
In terms of delta, you had buying delta in the breaker block?
Yes.
That's what you're after as well?
Yeah. So I'm essentially, so the thing is, I would be after an open interest increase of buying, because that's basically just going to say to me that should act as a breaker block, as a bearish OB. So that should, when these people went to do this, or even if it went to here and went down, this should be doing what it's supposed to do. Okay. And so because it didn't do what it's supposed to do, but it should have done what it's supposed to do, because of this, it's now telling me that this is more likely to play out. Whereas if this was just sort of a hollow move, then I'm not necessarily going to feel, because the reason I'm saying that is a lot of these people would have gotten out, but to actually shift the high of that is telling me in itself, okay, that it's strong enough to be able to push through what was there that should hold it down.
Yeah, so it's showing it's got force behind it. It's got drive.
Yeah, so it's saying it's got some actual drive and it's got conviction behind the actual move.
Sorry.
Yeah.
So the guys that have longed up the top there, have been underwater the whole way down through the move.
Yeah, and some of them would have got stopped out and liquidated. So there's a little bit of that, but it's basically just saying that there was intention to buy, and where intention to buy should. Okay, so we've got to remember, like, we don't need to get too quantitative and over the top with specific like pennies and cents here. We just need to understand that the concept should be, if this was a lot of buying, like whether they're open or not, this should be here. Or the thing is, I've noticed as well, is it doesn't like to let them out, but smart money know that if they've screwed up, they're going to get out here, because it becomes the first point of concern, because they can just go to TradingView and go, shit, people are going to go short on that, or people are going to take profit on that. So that's basically why I'm looking at something like that, because when I do see it push through, I'm now actually getting to the point of being like, wow, okay. And that should, if you were taking a trade and you're seeing something like that and you took profit, that's a smart thing to do. But then when you see it do something like that, then it gives you the confidence for this part of it to be a lot higher, because that should have done that. And then obviously this through here, obviously we can just go back to here. It was actually a range low reclaim. So pretty much you can't, you again, this is where we are at the moment with the actual macro range we're in. Everyone's going, oh, it's over. And yeah, like probably, right? But the point is, what I'm saying is, while you're in this area here, you're not allowed to be looking lower. We're now closed in it. So we now need to see, and there'd probably be on a lower time frame, time and space, and a deviation below the low and a reclaim through here. So this could be another entry, and this is obviously on the daily, and we moved on to lower time frames, that would probably exist. But you can see punters already in the range low are already loading up to go short. So that adds fuel as well. And the beauty of that is this is it, okay? We should have held price down, okay? Then we have from here, because this should have held price down, these guys should have been able to drive price down. But now we're up here, we've got two factors. If these guys got out, they want to get back in. And if these guys are in down here, they want to get out. So now you've got, these guys, we can just basically say these guys who got out, they're going to want to get in. These guys who have gone short here, they want to get out. And then you bounce up and out of it. And then from there, you're like, oh, okay. It's pretty clear that we have this dislocation of these guys probably piled back in and these guys didn't get out. And now they really have to get out because we closed up here. And then it gives you that perfect storm of everyone's going, people like you and I who know this go, well, this is a no-brainer. And off we go.
So if you were just looking for two things, it's obviously, like you said, open interest volume on the breaker, but then even like that little bit of selling just before the breaker was hit. So you're looking for just like two things. Yeah,
pretty much.
Yeah.
Yep. Okay. Yeah, because like, But again, like, and then the next step here is we're again isolating this, but we went through it. This is in deep discount. So there's a higher chance of getting something like this happening. Whereas I reckon this situation in a deep premium, these guys would have been doing something smart. And it probably would have rolled over, or it would have stopped them first to here. And then it would have rolled back out of it and over. Does that sort of make sense?
For sure.
So this is where you can use a time-based chart. You can bring in your FVGs, you can bring in your breaker blocks, your order blocks. We could draw our range in here right now. You know, you can bring your levels from TPO over into here. We can, you know, even dissect what the current price action's been doing. So obviously there's a lot of, you know, selling that's happened down through here. We've had open interest increase all the way up until yesterday. And then yesterday we had a large amount of volume with open interest decrease, which is saying a lot of people shorted, and then a lot of people were taking profits. But if we look at these days in here, the volume in here and here was pretty minimal. You know, the volume and the delta where it settled on. So it was like this was a significant day, and now that we're below this day, it's not ideal because we're now at the point of like, you know, this was sort of our go candle with open interest increase, and now it's sort of just like wrecked. But it's not ideal essentially. So if we're looking at this now, I mean, you've got to assume without, you know, over analyzing everything, you know, some sellers in the low down through here, but this is there's a point of control down through here and a point of control off this day. So around 106,900. Go back to 106. I'll just draw it in where those points of control are. 106,900. And
there was a pop, yeah.
Yeah. And that's pretty much the FVG. And look how middle line that is. Right through it. And we also have that bit of that would have been an inside bar at one point of time. And then if we also put the FVG, if we put this, so that's premium. So ideally, and then we got the order block through there. So this is where it can get really messy, and you can start just putting layer on layer on layer. 50% pretty much comes in on that order block, a HV point of control. So yeah, realistically, I wouldn't really want to see. I mean, you can in here, but like this is where I'd want to see a bounce. I'd want to see a bounce around this, you know, 1747 to that one sort of 800, and that would obviously give us the finished actual. I don't know why this wants to keep doing this to me tonight. Throw this tool in the bin. But yeah, it would give us that final retest kind of thing from there. That's what we want to do. Because we've got the FVG, where that's sort of an inside day bar. We got the perfected 9. So we've actually got a 9 candle off there as well. We do go into the discount. So realistically, and that's sort of where I'm actually sitting my stop. I don't really order block through here. And I think I'm hiding underneath this block. So pretty much like if it does get volatile and it just goes and comes back up. But yeah, if it's clean and nice and it's not too mean on us, down into here, get the previous weekly val, and also get that stuff there. But yeah, you can see, you just go on exo chart, see where the points of control are, bring it over, and you get sort of these perfected levels that come across through here. So it's really, really good tool to look under the bonnet and have a good idea, sort of like, you know, where your maximum volumes and that sort of thing are. And then you can go and look at like what's, so it's 106,900. We can look at the TPO as well.
Yeah, it's on there. Weekly, I think.
We're 106.7, yeah, 750. So that's sort of what I was saying. It's 106.750. 106.750 puts us right at the 50%, right in the body of the inside candle, right in the 50% of the FVG. Like, can't make this shit up. You know, so that would obviously be the point that I would like to see. See some stuff actually step back in. 106.750, and you just go sort of look at discrepancies everywhere. 106.750.
Fortify on the daily often.
What's that, mate?
Delta candles.
Like Sorry, what was that again? So I'm a guy. I was looking at numbers and I wasn't listening to you.
Just the do you like jump onto like your delta candles?
No, not often. I've actually like normally I'm on trend reversal and I just look at them and then I was just actually thinking, I was only like a couple of weeks ago. I was like, what am I doing? Why am I doing this? So I sort of have started to do it more. Price action's been shit sort of since. Like I haven't really seen any crazy setups, but I think I got to be honest with you. I wasn't drunk, but I had a few drinks on the wedding night and I got home and I didn't want to start too late and I saw that limit order, but I did something. I can't remember what analysis I did, but I think that may have been involved in some TPO and stuff. But yeah, I still nailed that trade actually. But I think I may have done that. Looked at, used some different time frames to actually break down some PD arrays and POCs and that sort of thing. Okay, so we also have around that level, we also have the open. I'm on the monthly. So we have a monthly open as well around that point of control, which also makes sense. And then one more, we'll go here. 106. Okay, we've got a time point of control there too. Is there any? There's a thin spot. Yeah, there's a thin spot at 107. Little thin spot there, and a previous day value area low. So if it wants to front run some people, that's where it's going to do it. So like this area, like this is the area. This here, that's sort of where I'd have my eyes on. If it is to, this is terrible, right? But you don't know. You're in range low, and we might shock everyone and do something like this, and then just chew our way up here and go for it. So you got to be open minded. Anything can happen and will happen. And then you can also go back to your trend reversal as well and cross reference different things as well. 100. Do I have anything already there? 106. Move across. Jeez. Okay. We can see it's significant level, hey? I bounce off that. Yeah, I just think it's a level that you probably, because it's had so much interaction and B-shaped profiles off, I think that's probably something that you'd want to see around this vicinity hold to either get that first reaction, nice B shape straight off it, or a bit of a mousetrap where it comes on and you get a B shape, maybe off the start of this delta incline, which has imbalances off it through here, which would probably be around the 50%. So your 50% of your VWAP and your that inside candle body is probably more around here. So here's your reaction trade. And that I probably wouldn't even wait for the reclaim if it follows through that. I'd probably be more likely to want to see something and maybe do the reaction and whatever there. But like you could treat that as one trade and then get a reclaim trade, didn't work, and then you could wait and do the same down here again because you've sort of already assessed the area. But again, I'm just going to give you a disclaimer, like look at price action and the volume. That's the problem. We've got the dislocation between price action. They're not working in tandem, and that's why we're getting this absolute mess of price action, this kind of real nasty, let's go and let's not go at the same time. But yeah, I think that's been a pretty good session, guys. We're nearly at 9 p.m. My time, so nearly 8 p.m. for some of you guys. So probably we'll probably call it there. Any more questions before we finish up? While I've got the charts up.
If you could do a real quick show us how you would have got into that trade of that order block that we've been talking about all night.
Yeah, okay, sure. So that was the
where and when, maybe with the replay.
Yeah. Let's just clear some of this stuff off. And obviously, like, you can go and do all that trend reversal stuff and whatnot. Let's go replay tool. Oh, it's using the old one. I can pretty much already tell you, probably even without the replay tool, because it's kind of pointless to use the replay tool because I'm looking at it. But here, like, you've got it marked out on the 4 hour. You've got a high volume that's pumped up through it. Okay. You've got the time and space that's gone in through here. Now, with this, if you were sort of just looking at this alone, there is probably a more smart trade to take. And what that would be like, see how you've got this becomes an order block pretty much once you start pushing up and out of it. So you've closed up here, and this is actually called a rebalance trade. So it's where an FVG would be. I think there might be a slight FVG in there. But you can pretty much see that may have front run you. But again, I'd probably be using trend reversal here. So it's something I don't normally do. But if you wanted to go off that as an order block, you've got some conditions met. You've got time and space. You've hit a VWAP. So you may have rules where you don't diddle in the middle, 50%. Then this would be questionable and could catch you out going, oh, I want to cut this. Because remember, this is 4 hours. So within inside of this trade. But once we get the big thrust candle that moves all the way up here and through, then you've got like a shift on this time frame, which is this candle. You'd pretty much from here get in off the top of that order block from there. That would be a way to do it. If you went lower time frame, like if we were to actually, I'll put the replay on for here.
It makes sense because I thought you might have got in even earlier, and I couldn't work out
where. I'm showing you probably the most logical, safest way to go, right? Which is actually, if we treated this like the little range that it is, and we're getting the outside break of that, and we've confirmed that we're above there. Just remember though, I'm talking to you about the rules, and the rules I said before is we're not really allowed to trade inside of here or inside of here. So there'll be times I might do things and you'll look online and you'll be like, you broke your rules. And it's true. There will be times I will bend rules, but I'll bend them within some sort of a reason. So in the course, you'll hear me over and over and over talk about not doing this. But in this case, it could have obviously yielded a good result. Like we're talking about at the moment, the low, hopefully getting a bounce out of the deep premium. But it doesn't necessarily, this in itself is a reflection of strength. And then this can actually be the smarter trade to take because you've let everyone gamble in here. Does that make sense? So I was talking with Zaki the other day about this. We talk about that we want to get in on a deep discount, but sometimes when you get something like this, you really would rather it bounce off here or in here. And this is okay too. But when you start getting back to here and here, have you guys heard about, I don't know if I talked about the Fibonacci analogy before, but psychologically, the 618 is the best discount for psychology, but actually anything beyond that is actually not a good discount. So let me run you through this for a second. Let's say you go in to Harvey Norman and you want to buy a television. Okay. This brand spanking thing at the time is $10,000. Okay. And you go, that's ridiculous. I'm not paying for that. And so does majority of the people who walk in, and maybe just one rich person walks in the day. They're not selling many of them. But then it moves down, to all of a sudden there's a sale on, there's a 25% sale on. It's now, 7.5K. And some people go, oh, that's a deal. And some other people are still laughing, going, absolutely not. Okay. Then out of nowhere, 50% off. And you're thinking to yourself, fuck yeah, it's my lucky day. That's half price. But then all of a sudden it's down to 75% off, or 61.8% off. Now, if it's around 61.8%, at that point, you're going, yeah, this is a good buy and I'm going to buy it, but what the fuck is wrong with it? Now, by the time it's 75% off, you're going, does the TV even turn on? Does this thing even work? And then it's 90% off and you're like, nah, you take it to the tip. I don't want it. So it's the same thing with this, that we need to look at it the same way, that when something gets this perfect retest and it just goes, that's a lot of people paying full price. When it comes to 50% off, it's still a good buy. Fuck yeah, I'll go out there and see. They do it all the time. 50% off store wide on products. But you go for the sale. There's nothing wrong with it. I'm getting my 50% off. But they found that 61.8 is like the max point of, this is good, I'll take it. But once it gets down to 70 odd percent or whatever, people start going, nah, fuck it. There's something seriously wrong with this. And that's when you start seeing this kind of thing down here and you zoom out and you go, oof, I'm going to let other people do the gambling, and I'm going to wait and see if it's actually worth it from their gamble. So that's why the 50% can be a place to buy. But if I tell people that, hey, every VWAP you should buy, or everything every 50% you should buy, there's still the sticklers out there who go, oh, 50% off, that's a bit nasty. I'd actually rather buy a bit higher, you know? And other people go, no, this is a great deal. And that's how we get that real nasty kind of in the middle bullshit that goes on for ages. So that's why it's sort of like they found the 61.8 is like the golden pocket of like for the cheapos just under 50% to be like, you know, that's a good discount. So that's the analogy that goes there. So that's why when we're above, like, here's the top of the line, but now there's so much demand above this point, they'd have there's not enough TVs out there, and now you're on a waiting list because there's not the supply and demand. There's not enough supply, and there's too much demand. Why? Because there's no one selling it, but everybody wants to buy it. So when it does come back down and they get stock in place, everyone runs into it, and we have the same issue again. There's all these people, but by the time that you're down here, there's too much supply. And there's still the question of, is there going to be enough demand to be worth how much supply there is? Sellers versus buyers. So this is where we can simply wait and actually see if it's worth it and join back in when we know that people agree that it was a good discount, good for them, but we might not want to get in. But at other times, that's also where, and the context in this case, there's a breaker block. We did the order flow. We know that there was all of these reasons as to like, we know that this demand in here at the 50% can exist more likely because we know that people obviously want to get out down here. And we also know that over in this area here, people who got out, and that a lot would have gotten out, now see price up here and gone, fuck, I should have just held on to it. Please come down, please come down, please come down, comes down. Thank you for coming down. I'm going to buy into this now. So conservatively, better trade is to actually not trade the premiums and wait and, you know, get a retest of like an order block. We saw that this actually became an order block, obviously. And at the same time, though, you know, it's up to you if like you work at other little ways, lower time frames. If you know where you are, you know what's happening. You could say, oh, there's a high chance because of A, B, and C, this is going to go up. So you could even just be dollar cost averaging, like down here. You could say, all right, if we lose this low, then it's over. But I might just start, you know, might pepper some in here and pepper some in here. Or you might wait, for instance, you know, I'm talking to you guys now that you sort of understand the gist of what I'm saying. The actual trade setup is there, and now you're just being nitpicky trying to get like the best entry. And that's where like you'd even have this like inside break here. Morningstar reversal goes in, but you could go, oh, there's a pin bar. I've got the time and space. I'm going to enter the trade here. I'm going to put my stop below that low there. Scares you a little bit. I love it when it does it, but you know, it always comes back down. Doesn't quite take you out, and then it takes off from there and you're laughing. But then you could have just had a stress-free of like time and space above the order block. And these guys have already done it. And all you're doing when you're seeing this is going, give me the pullback. Where's the pullback? Where's the pullback? And it comes down, you know, even for someone who entered through here, you might be like, oh, damn it, we're rotational again, but we bounced off this previous day value area high anyway. There's HV point of control. There's all sort of little things you can do. And sometimes it's not easier. We're on the 15-minute lower time frame's not easy, but I'm just going to say simply, you know, and I mean, I can probably see, it'll take me too much to load up and find it, and I've taken up too much time. But on trend reversal, there would probably be some really pretty looking fat B-shaped profile in the low. And then from there, I could probably take it. But there might even be some other levels as well. And that's the thing as well. Like, I look at this stuff, but it's even more strong when it's coming across. I've got to get some organization. Was it this one? No, it wasn't this one. This one. I've got to clean up my levels as well. But when you've got sort of these levels going everywhere. So on the daily, and we had the 2-week CVAL. So that's probably a lot lower than there's other levels in here. I've got this old level through there for whatever reason I was trading at the time. But you will get other higher time frame levels. I just see this does absolutely anything. Not quite. So you can see the 2-week CVAL pretty much was holding down price at this point here, but we didn't even come and get a retest of it. So again, that in itself, when it's up here, says, hey, we didn't even get a full outside break B retest. Like I could have been someone who was waiting for the B off that, didn't get it, and then I'm up here and I'm like, okay, well now I just have to be a trader who's going to go back to the old school order block, buy from there, join in higher. Maybe I don't think there's any anxiety. There wasn't. Sometimes what I don't like about buying higher is you get the anxiety of the whole like doing this stuff to you for ages and then it takes off. Not anxiety, but you know what I mean. You get to wash in and out of unrealized gains instead of buying off the low. Hopefully that sort of helps though with that thinking.
Thank you.
Cool. Any more questions, guys? I'm glad you brought up that question because it was actually good to be able to. What's that, mate?
Just sorry, real quick. Do you always, we've talked about a lot, do you always wait for the reclaim? Or can you sometimes, you see like an upthrust candle with a lot of volume?
Yeah, like in
There
this
we go.
situation. No worries, mate. Like in this situation here, like a reclaim of this, do you mean?
Yeah, so you shot through, come back down and reclaim. We've been talking about those, but sometimes you just shoot through it and it just keeps going. You never retest.
And what I'm going to say to you, mate, is tough. That's it. You need to wait for a retest, or you need to wait for a pullback. Okay. So like again, being transparent with you guys, this was an A grade setup for me, and this was before it even did this. I thought I picked the breaker before it was going to happen. Then I saw it. I don't know what I was doing that night. I was not able to trade. I missed out on the entire run. I just didn't buy it. I still could have bought it. So if we take replay tool off and we drop back out to 4 hour or whatever,
just hit that.
It ran and ran and ran.
Wow.
What? Yeah, but I don't care. Why do I not care? Well, guess what? We're down here. I don't care. That's the thing. Like, we just need to get out of our head that we only ever have this one trade and we need to put it all on the line. And it's like the one that's going to fucking make us drive Lambos tomorrow. When you learn the skill set that I've been able to get and you can trade the market, both ways, and you can trade under several different conditions, it doesn't matter. $1,000 is $1,000 in a trade. I trade bear markets too. You'll find me in a bear market if you get bored. Like that's the thing. You just find a market condition. You find something that's going to fit into a strategy, and you extract the market and turn your computer into an ATM machine. Don't get me wrong; it's great. If this thing, look at this, we've actually bounced off here at the moment, off this low that we're just talking about.
I'm just saying we just bounced off it.
Nice. Actually, where do we have the technical analysis up for that? Was it on the other chart? I needed
900. You said.
Yeah. I think maybe I cleared it earlier, did I? It doesn't really matter though. We got a 9. Are we going to actually? No, we're back in the range again.
Did we close the gap on that? Did we close the CME gap on that?
Let's have a look. Yes, we did.
Yeah, I think it was. We did close it.
Yeah, buddy. All right, let's go. Where I go. I go straight over to the trend reversal and have a bit of a look. They need to fix this.
So I'm just looking at.
Yeah,
this is the off.
Yeah, there was the level we drew. So it wasn't too bad. We had a lot of liquidations coming in.
I'm not seeing a B profile on the.
There's this big nasty one.
Yeah.
It was a big liquidation event, so it's obviously a lot harder to get a read. Maybe we'll get something a bit cleaner. We're at the previous day value area low. We have open interest. So we have a bit of a squeeze of shorts at the moment. Not seeing anything too mega. But yeah, let's see if we get some closes at the moment just above the traditional. What are we on here? I'm on the 15-minute. Yeah, we've got a bit of a continuation 9 at the moment, but we did get the bounce that we were expecting to get out of the FVG. Yeah, it was like we said, it was more out of the middle of that block. Yeah, boy.
Yeah.
How good is it? But yeah, when you can achieve sort of like that level, let me just draw those. I just want to have a little bit of a look again at the. Whoops. We'll just go to FVG and see exactly where it bounced out of. So we didn't quite hit that FVG. So it was a bit of a front run. But yeah, that level, it lined up with the daily VWAP anyway. But you see, like that was just the level that, like, without looking at, like, if you were a price action trader and, let's just say hypothetically it does take off, but it still looks like absolute shit. But like, when this is a different format, it actually takes off from here and you're left standing there going, damn it, I got front ran from this point. That's where, like, you know, we were just doing a simple, a bit of like the XO chart stuff. We were able to go through and pick out from here. We're able to go through and pick it. So Binance been a bit lower, I think, than Coinbase. But yeah, we could just pick out the level from here where Coinbase was more accurate. It's because there's more liquidations that happen on perps. They just get a little bit more washed. That's also the beauty, I guess. If you trade spot, you can get pretty precise. But if you're trading your pair, I don't trade Binance. I trade Bybit. Fuck Binance. You can obviously get a little bit more specific with it. And then, you know, you just go and cross check. You know, buy tail. You know, the initial balance has been a bit of a tight one. Is that the weekly I'm on? Yeah, that was an initial balance that we dropped out of. So we got the 2-day here with, you know, 20 minutes to go. So I close back in with inside of the Tuesday value area low would be ideal. We cleaned up, you know, I mentioned several times in the Discord, a few of the boys have. We've cleaned up these poor low anomalies now. We've taken it naked value area low. Not the best low, but not the worst thing in the world. Had a thrust candle off that one there.
So it's going to run. It wants to start running.
A bit early to say, but we can just sort of and just normally just sort of go over and cross check. So there was the cluster right off that thin spot. Beautiful. Did we hit the other thin spot? The thin spot on here as well. Oh, we went below. Yeah, that front run thin spot went right through that. We dropped off. I always just sort of like to have a bit of a look at what exactly lines up with a pivot, just to sort of educate yourself.
So you know.
Yeah. Yeah, there we go. So off that 14 million where the bidders step back in from that point there. So cleared that little bit of a thin spot and actually, because you can treat them sort of like as like a mini FVG, but that's obviously off the, if we had a, you know, like if we did this for a sec and we put this through here, we could say, yeah, off the 50% of that. And if I draw that line from there, actually it was off the deep, out of the deep premium. So not bad off that order block. It's actually like, you know, if we did the whole thing we just talked about, you know, it came down here, it'll look a lot nastier. That's also why a poor low looks bad, right? Because we got to the point of questioning. Then we have to convince people, whereas this is like less convincing people, even though we're looking at such a granular level at the moment. Well, you know, we're getting a little bit of a buyback happening at the moment. High volume. We're still in that range low, guys, and that's what I keep on harping on about. I'm bullish why we're in the range low. That is all I can say. And then when we're not, then I'm not. Any more questions, guys? Even general chit chat about things? Pretty happy with that. I think we're all probably just staring at the charts, aren't we?
Yeah.
Not a bad little penny going in. Be nice if we could get it.
I know. It actually looks good.
So what I'll do now is I'll highlight the nines because of the significance of a 9. And I'll go down to the 1 minute. And now I want to see a reclaim of that. I don't want to see a rejection. Developing value area low comes in at the deep discounts. Obviously, it needs to ideally clear that. Some HV POCs. This is more significant. There we go. Push, push, push. Okay, we're at the 50, so we're at premium now. Come on, shift it, you little fuck.
What time frame are you looking at to find that?
1 minute. I'm on the 1 minute here. So we got to close into discount. There's obviously the order block through here, a bearish order block, which is just a supply point. Ideally, I want to see acceptance in here, just like we got a potential acceptance here. We're seeing a push now. If you want to go crazy, you can go down to the 1 second. Okay, we got a 9 on the 1 second. So we got, you know, nice high low put in.
Some orders are pushing through now.
Push back up. Come on, get into that order block. Get into that order block. Come on. It's like the ponies down here. Hey, look at that. Looking good. Smoke him. Let's go back in the 1 minute. This is ridiculous. All right. All right.
There's a fair bit of volume on it as well.
Yeah. There is. I'm looking. I've got other charts. I've got big screens everywhere, so I'm sort of having a bit of a watch. What do we got? Oh, I also want to jump on the 5 minute. There's also a CS9. Okay, there's that CS. Okay, so we just turned a CS, potentially about to turn a CS9 into a breaker block. This one here. I want to see if we can actually turn him into a breaker. Sometimes I add the extension on, I've noticed as well. But we'll just go without him for now. So you can see that, so we should be getting a retest on here at the moment. So we got time and space for us 1 second traders. We got a nice push at a deep premium. Okay. And then, you know, you can go crazy with this, guys, and you can start drawing your ranges in. All right, we're in premium again. Got a little FVG here. So this could be a bit of a kickback point here. Don't want SFP that though. Hold it, hold it. I want to see, oh, it'd be great if we could turn that breaker. Yeah, we're getting the kickback, like I said. I don't really want to lose. So there's your discount point with your 9. So that's this is your high supply, your high demand point is here.
It changes.
You got your 9. So we could go down to milliseconds, but I don't know if I can do that.
What do you want it to?
So yeah, basically at this point here though, I'll just be looking for this level through here to hold off, because we've got the 9 there, and then we also have this point, it's a high supply point. So this whole area down through here is offside, and it should remain that way, and it should push up. We pretty much got a little front run, which is even better. Sorry guys, I'm on the 1 second. Wait till Kyle hears about
good,
this.
Man.
He's gonna for fuck's sake. He hates it when I go on the 1 second. It's just a really quick. What's that? Is he on the call still?
Yeah. He's probably not listening.
No, he's probably asleep. I'll probably put him asleep. But yeah, so essentially though, this is this is like, you know, what pattern can
one now. Fuck.
Come on, guys, we need this ascending triangle to work. Oh, breaking out on the low of it. I don't trade patterns. I don't care much for them, to be honest. It's a bit of a double top. So we're still getting supply to that point through there. Okay, bit of a double. So now that was that original point over here. It's just funny though, because we're like literally on the 1 minute, and it's just I have traded. Actually, what did I trade? I think was I with you, Reese, when I was trading the 1 or 5 seconds in Bali?
Not me.
I think on the last day, I think we're sitting around and we're looking at EXO, and I started trading the 5 second chart.
Oh, actually, yeah, that's right.
Just the internet's being shit. I don't know, but things seem to be quite delayed.
It's fucking really annoying.
But I mean, that's probably looking all right at the moment. Hey, we also got above stepping it up. So we got this 5 minute here. We're actually bouncing off the top of that. So you see how like when you're moving through time frames, you know, little things are happening like micronized with inside bigger things. And so it's really important to always be checking your higher time frames. You know, like on the 1 minute, we've got the 9 over here. So even more important than any sort of level that we pull from there is sort of the 9 over here. So this is probably, you know, we can step up again. Is there a 4 hour or anything there as well that could be holding us down? It's looking all right, but see how we're having this little bit of a pullback off this. If we walk down to like the 15, we haven't really shifted anything, but we do have this bit of an order block. It could be an auto rebalance. So it's a 9 as well. So that in itself, I'd want to sort of see that level there hold.
Yeah.
And then 5 minute, we can see what's going on with the 5 minute at the moment. So we want to see, so it doesn't matter, like it doesn't matter too much. It's not a shift. It's a bit of an equal high, not quite a shift, but you know, it's pretty good though. Yeah, obviously the order block at there, poor highs at the top of that. And then from there.
So we've got another push now.
Yeah, having another bit of a push off there at the moment. But nonetheless, like, you know, we'll see how it goes. You know, if it wants to come back down and try this breaker through here, which lines up with the developing value area low, I might do that. But how does it, like on the, how long do we, yeah, okay, so we've got 42 minutes to go on the 4 hour. So if it wants to lock in something really nice, you can see bulls are probably going to want to put a bit of work in on here. The 1 hour at the moment. For the 42. Just want to start seeing some 12 minutes for the 30. And the 15. So the 15 got that high volume push, and it's got that 9. So it's really that sort of, again, if we sort of just isolated that, because that's actually like a solidified close above that. So I'd probably want to change the style, do I have a different color? So, yeah, a green will do. Okay, we're going to push. So that's gone into the premium of that 9. And we're at the developing VWAP as well. So it sort of makes a bit of sense that we can get a bit of kickback and a bit of chop through here. We're getting the push off that one there. 918. But yeah, I don't want to keep you guys up all night. We're pretty much finished. So yeah, thanks for jumping in. And again, make sure you guys use the Discord. So any questions you have, anything about tonight, if you go and try any of it out or have further questions, make sure you drop it in there. Drop your screenshots in there. We want to sort of get it pumping. Yeah, happy to help out. We also have one-on-ones for you guys as well. I try and do some where I can instead of the other boys, but yeah, normally we sort of just go with Jekus in Discord. If you want to book in to have those, if you haven't done any sessions yet, you get 5 sessions with your membership in the Wealth Club. So yeah, book those in. But other than that, I might keep this rolling for a little bit for those who just sort of want to hang around and have a little bit more of a chat. But for anyone else who, if you feel like I'm holding you up, feel free to pop up if you've got other things to do. Otherwise, I'm going to stay here and see how we go.
Can you show me the question I was asking, like from your 3 hours? If you get it.
From the what? Sorry, in there. Okay. Oh yeah, for
the one
sure.
I put in the chat.
Yeah, no, for sure. Sorry, mate. I've you're a bit over there on the screen. I'll have a look at that again. When you only show the 3 hours by the first time you take the trade reaction, the second time to reclaim, do you look at any other components apart from PA on the charts? Oh, absolutely, mate, for sure. So that's sort of what I was saying with like the 3 hours is like the way my process in trading goes, like generally it's not always
10K can do the 3800.
Hang on, I was gonna mute. Yeah. So it's not always gonna be sort of the same process, right? But the way that I'm doing things is we have is this. So this is obviously, as you I'm sure you've been around long enough or you've been doing the course. I'm looking at sort of you're on the daily recording, like the LTVW. So I'm using that for volume. So obviously I'm looking at those levels. I'm looking at them across the higher time frames. I'm getting a bit of bias of, inside break, so we rotation when balanced, etc. Then I'm also adding that other level, which is sort of the price action stuff, the smart money concepts, etc. Then obviously gets a bit messy, but I can put them together. Then from there as well, though, is just to, you were watching when I found that level pretty much around about where we bounced off. That's where you don't need to do it, but the next step to take is exo charts, where we can use these footprints to see exactly what makes up the price action. We're using the TPO charts as well to go. We can create those composites, so the LTVW similar. It's based on volume, but we can be more specific, sort of combining different levels and days together. So obviously, if we combine 1, 2, 3, 4, 5, 6, or sometimes I don't really use that one. That's why I got the 5th one there. But if we were to combine these together, we have a composite now, and now we can see how price will react. We also could add the PD range over it when we get into those levels. So I'll be grabbing these levels as well. And then I've got another trading view chart it's a bit messy. I need to sort of clean up to see what's relevant, but you'll see how I've got all the acronyms on the side. I can then get this sort of analysis with the PA and the LTVW and put it all together to try and refine really strong levels of exactly where I want to take trades. When I find that level, I actually go back to exo charts, and I personally use something called trend reversal. I teach it a bit in the course. This isn't a time frame based chart. This is a messy thing. It's not always that messy. Obviously, it was quite an aggressive bounce. Hasn't always been doing that. I want to chat to the engineers and see if it's happening to quite a few people. But that's where, say for instance, we had these levels, like the 2-month and the current developing vowels I had in there, and that's where I'll be looking for something along the lines of, I've already looked at the LTVW. I've already looked at the price action. I'll even have something like order block 50% with this value area low with inside bar this. So sometimes I get these are quite long, and then I'm looking for the recipe of there was a lot of longs going up into a high, for instance. The candle closes back below the previous value area low and value area high. We can see the bulk of the volume was in the high. Then I can take the trade, stop above the high, and then obviously that would move down. And vice versa, obviously, for longs, I'll be looking for, if I have a level marked somewhere, I mean, we should have that level that we marked earlier on. It's going to be messy, unfortunately, to look at. But you can see that we started getting, it was quite a few, but these B-shaped sort of profiles down through here. This moved really quickly, by the way, so it's not, it wouldn't have been an easy one to get. But for theory base, we can see that we basically mouse-trapped, but we can see that we had some sort of clear structure coming back in, a bit of a Morningstar, bit of a, was around ones.
So is B shape already always like follows by a mouse trap?
What's that?
So in the XO charts, the B shape profile, does it always follow by after a mouse trap?
What's the last thing you're saying?
So if I see a B shape profile in the XO chart, does that always come after like a mouse trap or before a mouse trap?
Before, sorry, I don't get the last word you're saying. Like a
mouse trap.
If I see a B-shaped profile in the XO chart, what do I infer from that?
No, I get you. So sometimes there'll be a mouse trap. So if we go back to originally what we were saying, if we're looking at the reaction, you won't have a mouse trap, but generally like this would be the mouse trap in here or collection here. But I know what you're saying. Sometimes you'll have a level where you'll get to, and in this case, we had those quick mouse traps. If I can find you something that wasn't so ridiculously quick, like a normal day of trading, we can find just sort of a clean level to bounce off. And you can see how these levels sort of play. Probably got one. Since I've been in a trade, I haven't really actually been adding any levels or trading it much. That's probably why I need to update my levels. But I mean, this one here, for instance, that it dropped below the level, and it didn't actually have any mouse trap on it, so it was just a B-shaped profile. But there will be probably some. Geez, this price action's been crazy lately. Sort of glad I haven't been trying to scalp any of this. Value area low. I'm trying to find a mouse trap setup for you though. Sort of a larger one. I got a B on it. Pretty heavy in the low, not the cleanest B-shaped profile. Okay, that's a mouse trap set up here. So let's say hypothetically we had a level, okay? And we've finally come down and we've hit the level and we've put that pocket the low. Let me change the color of this. It's really hard for you to see. So we've come down and we put that B-shaped profile in. We've closed back with inside this candle here above the value area low. Might want to wait for that to go in. You might not, but you might jump in, stop below the low. Then you get that mouse trap where it just comes underneath it. That in itself would also be another trade that I would take if I got stopped out immediately getting into there. Because then I'll just say I was a part of this sort of mouse trap setup through here. And then that will take off. And then because you've got your stop below the low, you kind of get a bit scared here, but you don't get taken out. And then obviously from that would take off. And with that, you could even say it's some sort of like really flat based sort of inverted head and shoulders type thing. But I don't.
So the follow through can happen like twice or thrice. So the third time it almost touches your stop, but it doesn't really touch.
Yeah, exactly. But there will be times like with the 3 Rs, what I'm sort of talking about is like there'll be times where it'll be like this and you'll have a B-shaped profile around here and you'll take the trade. But then what will happen is it can fully go underneath it. Then you might get a B-shaped profile. It sort of looks like it's in the middle of nowhere. And there is advanced ways to get in on that. But without that, we're sort of looking for, it'll come up here and it'll do some sort of retest. It doesn't have to be on the line. That could be like a, some sort of structure, like lots of open interest. And then you might see a B shape up here. And then that would be the second time getting in to the trade to the first time. And you sort of don't want to be a part of that. Does that sort of make sense?
Yeah, it does. Yeah. Thanks.
Perfect. Good.
When you see those like horizontal runs on Trev, is that literally a result of like there's just that much volume going through that?
Yeah, I think
like,
so. Yeah, I don't know, mate, because it's only since version 3 it's been doing it, and I haven't got an answer off them, and I want to ask them again, but I've been wondering, like, does it need to be stepped up, one of the rotations potentially to avoid this? I don't know. I might have a bit of a play when I'm, not on here, tampering with it and waiting for everything to load, but it has actually been a bit of a pain in the ass.
And then you're kind of missing, I feel like maybe you're missing entries because like it's just
Yeah. I mean, don't get me like there is times where, like, if you want to nail like fucking crazy low in the wick, you will be dealing with this, but not this. It used to just be like do, 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 and then it was sort of like it'd be real quick like this. It wasn't this whole like weird like doing this, because this would have done this in like, what was each candle worth? Is it gonna say? So I'm looking at the bottom, by the way. It hasn't even been a second. This all happened quicker than 1 second. So like it's impossible unless you're a computer system. It'd be impossible. But I'm wondering when it started to balance out here, 56, 50, 56, 58. So 2 seconds in here. So it's still like that thing went in really, really quick.
You need to have your level drawn in. You can't be
You
like
do, and sometimes you've just got to have some bowls and limit order. If you're watching live and you're quite good, you can limit order and you can literally have your finger on the pulse to market stop out if you're wrong. But then you're discalculating like slippage of something so abrupt, like it can be risky. So it's not like always advised. And then obviously as well, like if you've got your stream deck set up as well, you've got your buttons that you can quickly just nuke out as quick as you can. I'll just sit here with it and just get ready to nuke out of it.
Would you actually be able to run us through some in silico stuff one time?
Yeah, for sure. I'll set it up. I'll make another a dummy account and load it up just with a couple of $100. And we can jump in there and we can go through in silico and we can blow that $100, or we can make some money on it. It'll just be basically like different. And I'll have a play too, because there's like swarm orders and there's all you can obviously twap through it, but you can do all kinds of things with it, and I haven't really fully scratched it because I'm pretty simple with my trading. I don't need to go crazy casting giant nets, but there is DCA ways that you can cast a big net across a whole area, and you can make it percentage based, basically meaning like if this was to come back down, I only want to get into, it'll break your position up, if you're breaking up to 10, I only want to get in here, but then I might want to get in here, 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 here. So like make it so it's really spaced out, or I can do that the other way around. It's sort of like you can zigzag, like you can sort of pull in the ratio. So you can say I want to stack most of my orders here, but I at least want to get something in here and here. And it's as simple as like clicking and then actually dragging it, which is pretty cool. So yeah, we can set up an
yeah, that is you can't really define your risk as much, can you? You kind
no,
of
you can't, but you can yeah, you could it's sort of stuff you do where you change from cross to isolation mode and you don't use a stop loss. Your stop is to, so for instance, and this is scalping, guys, you're not going to go and put 1% of your account on, but you just go, all right, let's just put like $50 or $100 or something in. And like, if I'm wrong, and you might keep some margin there. So putting $100 in, you might want to still keep another couple of $100. So your liquidation isn't right below. You still want to sort of work that out, but change it to isolation, be like, my stop loss is liquidation, because that's what I normally get stopped out, So you're just making, so there is no risk. You can't go any further than being stopped out the normal amount. As long as you're not on an exchange that it's like an IOU, and when you replenish it, they take it off you. But yeah, essentially you just do something like that. And then from there, it's sort of like, it's like like I win or I don't kind of thing. And I know Mingy, he's a bit like that. I know he does some ISOs where he'll just put like, he'll go and, I can't actually be talking about this kind of stuff, but chat with him about sort of the way he sets up sort of isolated accounts in that kind of area of trading. But yeah, I can at least just show you guys with in silico like different ways to do orders and that sort of thing. I might even see if I can open up a spot account on there to not be showing too much of the leverage side of things.
Maybe it's just the interface. Really,
yeah,
can you show us what the tricks that you use?
For sure.
Yeah,
for sure. No, I'll show you that, but I'm pretty straightforward. I'm nothing too crazy when it comes to order entries and stuff. It's either a limit order or a market order, and stop loss, and like other little things I do though would be, I think I've probably mentioned a million times now, would be so for instance, something that could have saved people's lives up here. Let's just get again, where's that cleaner chart?
Yeah, I stuffed that up this morning. I should have taken profit up there.
Yeah. Oh, it happens, mate. Just got to get you've got to get take profit happy. I tell you what, man, I would be a wealthy fella if I just took more profits.
Oh, I don't know. I just wasn't. I thought we'd bounce, and I just kept that narrative.
It's all good though, mate. This is learning as long as you take from it for what you learn. So like this liquidation event that took place. Now, not 100% here, right? But the difference between somebody who got liquidated, right? Again, we're talking about derivatives. I'm not supposed to, but there was people with 3x cross who got liquidated because, like, obviously the engine chewed up. I read stuff online of people in Binance. They obviously seemed like the engine just completely stopped working. The deleveraging on short positions just cut out, so people got filthy rich off people's losses. It was pretty wrong. Whereas other exchanges like Hyperliquid were doing the right thing and obviously deleveraging people. But if you have like a stop below the low, right? For instance, now it had a bit of a bounce here on the 30 minutes, but I think some of them were pretty savage. If you have a stop below the low, you pretty much are now at risk of just basically like the full-blown slippage of like wherever you get out, you get out. But a simple trick, and you'll get caught out every now and then, but not that often, is simply find your wick and just put your stop loss just inside it. And that can save you so much in slippage.
Oh, yeah.
Because where's everyone putting their stop loss?
Below it.
Below it.
Yeah.
How do you front run everyone else in the market?
Put it just above them so you catch
Just just inside of the deep discount, just inside of it. You will front run everyone. You will have less slippage. Everyone else has to be basically in this pool, that's this waterfall falling, and they get taken out when they get taken out. We trust the exchanges are actually queuing our orders in at like a line of who was first. So Zaki, if you go and set your stop loss at 119,800 and I do it 5 minutes later, you should get out before me. But there's nothing transparent on that, So because we don't really know, there should be a way to print out like user IDs of like your number 322 in line, at this level, and there's that many people who are waiting to get out, and then, or some other exchanges might do largest to smallest because smallest will have less slippage. I don't know how it works. I'm sure maybe even Brendan would have more information on that, but I think we've spoke before. They're not that transparent. Traditional finance, they're supposed to give you a bit of information on that to make sure it's regulated and they're doing the right thing. But a good way just to avoid it for now is just find that wick, few bucks, $5 into it, whatever it be. Sit inside there and watch how much less slippage you get. Every now and then the double bottom you get taken out on, you sort of you'll go fuck you romps. But with how little that actually happens, you save money in the long run, not having to deal with, it's a nice way to estimate risk as well. And I'm not saying you're not going to get slippage. Like you might, but probably.
Yeah, but you're ahead of everyone else's slippage.
And the thing is, you're going to still have people trying to bid a double bottom. So like you're going to probably, that when the exchange says estimated loss at X amount, it's probably going to be the closest thing to that amount possible compared to estimated amount that ends up being like $50 or $100 more than they estimated because of the slippage. Cool. All right, guys, we'll have a quick look here and then we'll probably wrap it up and let you guys get back to it. Yeah, okay, so we'll get a little bit of a pin bar. So, our thesis again was that while we're inside deep discount, we need to stay rotational, and that's what we did. And here we are. So this is my way of just being mechanical. I'm not emotional. I found a level down there. It was, educational purposes, not a signal or anything like that. But, even if you're a low time frame trader right now and you saw that level and you're like, oh, okay, let's see how we go. You're up a percent. So just one of those things that, this is what we can do. And we're not emotional. We're not, selling our whole portfolio while we are rotational within the higher time frame range.
I guess Slimy would have bought that wick.
Probably. Probably in there buying. The liquidity hunter, I don't have it on here at the moment set up, but it's probably going off its tits.
One of his alerts went off. The auto trader. Yeah.
He's gone. He's gone.
He's gone. He's off their scale. Yeah. Or actually, he missed the main low, and I remember he was a bit hurt by it. So it's like he's got a second chance, and it's probably a redemption thing for him right now. Like
second lease on life.
Let's go. So yeah, I'm happy if he's bidding in for some more gains for me. Yeah, perfect. Cool.
Not exactly leaping out though yet, is it?
No, I mean, yeah, it's not the. What are we on the? How are we going in the hour? You want to start seeing from here, you know, a bit of an hourly close going in. What have I got on? I just wanted to bring over these. I've got so many fresh charts going on at the moment. Order blocks, CS9s. Yeah, we've got that 9. We're above that 9. The extension we're not above. 4 hour, we've got a bit of time to go. I mean, this is not nice, but like I said, like if this was just like a massive player getting taken out of the market, like James Wynn or someone, it'd just be like, it could just be like the actual price action was this. And then we go. Sometimes you get discrepancies where this is like just one person being taken out of the market. You know, but there was some spot buying, so you know, there's probably a bit of hurt going on there. But yeah, we'll just look at the sort of watch for this 1 hour at the moment. And then, you know, we could even look for that low there, but we've taken that. So it's definitely setting up now for this is the kind of thing that I'd actually want to see moving forward, because we've got that inside break. And, you know, even if it is just something really takes time, like even if it does, you know, get up here and just takes heaps of time to actually chew through it, I'd be happy with that as well. Anything can happen and will happen. Or New York will open up and it will just be, you know, it might just go up into this fair value gap and just doof. We'll find out. We'll find out. Cool.
Awesome, mate.
Awesome, guys. Well, I'm gonna I'll leave you to it. I'll put the recording up when the server finishes processing it for you guys to have archived, and jump into the Wealth Club chat for any questions. And appreciate you all jumping on in your time.
No worries, bro. Thank you very much.
I reckon that's
Awesome.
the biggest effort yet. So thanks again.
You like it?
Yeah.
Awesome. I'm glad. Yeah, hope you all got something from it. Hey,
that was awesome.
Sweet as. All right, guys. Have a good one. See you.